All right, folks, let's go. Let's go, guys. So today we have an amazing session here for you guys planned with Nic Chahine, lead trader at the Benzinga Options Inner Circle chat room. A lot of you guys know him from there. That's pretty much where he was. He has sessions with all the chat members Monday to Friday, 9 to 5 p.m. Eastern, and they also meet as a group on Sundays for about 2-3 hours, and they go over hundreds of stocks. So basically, Nic Chahine is going to be here with us today. My name's Rodrigo, so we'll be doing this together here for about an hour, 2 hours or so. We're going to be talking about trade ideas, options education, setups, buys, sells, current market events, technicals, chart analysis patterns, a lot of things packed in this session. So just make sure that you are paying attention. And if you have questions that you ask and participate, that way everybody has a more engaged conversation, and we have a better session overall. So shout out to Angel, Bill, what's going on? Caesar, Hector, never missing a session. I like that. Terry Thomas in the house, good stuff there. So guys, without further ado, let's go ahead and bring on the man himself, the man of the hour, Nic Chahine in the house. Let's go. What's going on, Nick?
What's going on?
Not much, man. I know there was a lot going on in the chat room. I actually just came here from the cannabis event here in Miami. It was pretty good. A lot of fun there. But yeah, there's a lot of stuff. I actually talked with a lot of Inner Circle chat members there. If you'd be surprised, I swear to God. So there's a lot going on in the chat room. You guys are there all day. So how was the evening there with the group? How was that session today?
Well, today was pretty lively. So as you know, I share a plan in the morning, every morning, and I post it in the chat room and the live room. And my message has been very consistent. During these days when the VIX is high, when everybody's nervous, to practice what I call the ABCs. I mean, you can put whatever acronym you want. I just want it to be at the forefront of their mind. And basically the A would mean that if you get a move, like today, we opened up big, right? And if you had a problem trade, you should close it from the relief pop. For example, if somebody was long NVIDIA from yesterday, that's a real example from the discussion in the trading group today. And it was under fire, say in the last 2 days, and it was. And then they came to me a couple of days ago, oh my gosh, I should have closed it. And said, yeah, you should have. You should use the next pop to close it. So this morning it opened up. So he came into the chat room and he said, I should close it, right? I should close it, right? And I was like, yeah, you should close it. And hopefully he did, because if he didn't, now it's back in trouble. So you close a relief pop. I did this myself today. I did two of my 3 acronyms. The acronym is ABC. So I add insurance if I need it. If markets are falling, my portfolio is red, and I was like, oh my gosh, I wish I had some insurance, and then the market bounces for whatever reason, I should add that insurance that I said I wish I had it, unless there was a change. And then the second one would be the B, book profits faster than normal. So last week, I said I'm buying calls in the QQQ. The calls were down a little bit, which means I was long the QQQ. The calls were down a little bit, and then they recovered. They went green yesterday, and then they went very green today. So I said, I'm booking some of my calls. I'm locking my profits. So I did the B. So I practiced the book profits sooner than normal. Usually I would just let them run, but I booked them aggressively. I left some on. And then I did C, which is close a losing trade that gets relief. I was short Lilly. I advertised it. As soon as I took the trade, I remembered, and I didn't need to take the trade because I swore never to trade Lilly again, and it went against me. And then today, Lilly opened really down. So suddenly I went from a loss to a slight profit. Thank you. I cut it loose.
Right. So now, just to clarify here for those that are asking a couple questions there, Nick. So that you're doing this, you're live screen sharing, like you are in a room with them, correct? Sharing your screen Monday to Friday, 9 to 5, like, hey, Nick, I have a question. And it's like you answer it like right away with them live, correct?
I am, and I'm going to show you what we look at. We look at this screen. So this is what we are watching all day, a set of screens with multiple charts each, and we add more to them if we need to. This evening, we were watching Snap intently. Why? Because I gave my forecast, and I'm going to read to you my forecast as to what my, and I did a video just before the close for Snap showing what to do and what to expect and why not to buy certain spreads. And for example, this, you can't see it here. Anyway, I'll tell you in a second. We had a discussion about Snap for about 20 minutes. And then I made a video specifically for that. And I shared it with the people in the live room. And I sent it to the people in the chat room that couldn't make it. I mean, we had 275 people today, live, all day, 275 to 260, all day, plastered to their screens because we were doing good work. And the Snap discussion was, what's Snap going to do in the aftermarket? I said, more importantly, what's Facebook's going to do if Snap does this or that? So I said, if you want to trade Snap safely, you use Facebook because it's probably going to move in tandem with it. So here's Facebook. Look at it, right? So people took the bets on Facebook. I said, because you look at Snap, if you know options, if you're watching this and you know options, then you're gonna see a number that shocks you. This number right here. Look at its implied volatility. If you wanted to go long Snap, you would have had to pay 3 times more than normal, if not more. Or puts, if you wanted to short it, you paid 3 times. So there's no way you're going to make money on this, because even if you guess right on the direction, tomorrow morning, these have one day. Tomorrow morning, just from the sheer opening, regardless of where it opens, up or down, you're going to lose at least 40% of your money just from the open. Even if you guess calls and it rallies, 40%, up to 40% of your money will just disappear, even if you got the right move, because you overpaid today. How do I know that? Look at next week, 200. And if you go out 1 week, it's probably half of that. So the smart thing to do would have been to buy next week's call if you wanted to bet up and sell this week's against it. So for 40 cents, you could have had, not even, but 30 cents, you could have had a call calendar somewhere, or a call diagonal maybe for $1. So that would have been the smart thing to do. So I did a whole video about it, explaining how the dynamics work. And then I explained how and why I would use Facebook, because they're going to move almost 1-to-1. And if this one fizzles, then Facebook, you get to watch the draw again, because Facebook reports next week. So it's like having 2 earnings report with 1 lottery ticket. If you bought it for today for Snap, that was it. Your lottery ticket plays out tomorrow morning. If you bought Facebook, it plays out tomorrow morning. And it, again, second draw is next week on the same bet with Facebook. So that's why I said I would play it with Facebook. So it looks like, please open up here or better tomorrow, just for those guys and gals that bet on it. Not sure what that was all about. Talk about market manipulation. My read on the open interest in the options, and I shared with the gang, was that there is support at 29, better, I think, at 28 and a half. I said there's upside pressure towards 30 and a half. Look at where it's at. I said it could rally to 31, I think. I had the notes here. Where are they? But then after that, there's a lot of resistance at 32 and a lot at 35.
Yeah,
that's just for tomorrow. So I shared all that information, put it in a video, and hopefully people used it to maybe be able to make some money tomorrow.
The other thing, Nick, is that even though you focus on live trading and you do it the whole day, Monday to Friday, and Sundays, which we haven't talked about.
Twice on Sunday.
The other thing is that, maybe a lot of people don't know, but you really go hard on the education. Like, when you give a trade, it's like you give a full backdrop of the technicals, macro, micro, charting, chart analysis. And it's like people get those mini lessons on a regular with the market.
It's all about education. So if I were to label what we do, if I were to say, this is what we do for Benzinga, it would be that we do education. not not trade alerts. I offer trade setups multiple times a day. I offered setups late in the day for tomorrow. I offer setups for longer term. I went long Shopify today on the dip. I think I had profits immediately, but I didn't book them. And I shared how I did it, and it was like a quick entry, very simple setup. But I wouldn't call it. I wouldn't label it as a trade alert, even though there's a whole bunch of trades that happen with videos, with write-ups, with pictures. And but the better part is, let me see if I can bring it. This is literally from today. Somebody's talking about learning. Let me see if I can do this. Anyway, the learning part is the valuable part. Okay, and let me bring it to you. Are you able to see my screen fine? I'm messing. Okay, so this is from today. This is after the market closed. I still had 240 people in there. I actually, no, check that during the market. Somebody came in, Paul. Nick, I've embraced your advice on credit spreads and iron condors the last 2 weeks and have been getting very consistent on my earnings with less stress. Somebody says, what's an IC? Somebody other than these two says, it's an iron condor.
By the way, Morton, who answered that, is actually in the YouTube chat. He's popped up right now.
Oh, okay. So Matt and I had a good conversation late. So he was hard on himself today, and I told him, don't be so hard on yourself. You're not. Everybody has bad days or disappointing days. Today was tricky. Started up huge and then flipped. So nobody should feel bad about it. This is just one. I have dozens of these pictures. Every time I say, okay, I'm going to take a picture. So I have two from yesterday and a couple from the day before yesterday. I get tired of taking pictures, but I don't get tired of the message. I don't. The learning is the goal. So what do we learn? Whoops, there you go. Thank you. What do we learn? We learn the basics. What you're looking at here are a series of modular videos I did for us, and they go trade setup information in general. What are options in general? What's a call? What's a put? What's a spread? What's a credit spread? Table breakdown, how to book a loss. What's the difference between a cash settled equity or one that isn't? Like you hear, okay, I like the SPX over the SPY. Why? And what type of trading should I do? Should I buy a call? Should I buy a put? Should I sell a call? Should I sell a put? So I also do other videos every day that don't get posted here. These are evergreens. These videos will apply anytime. Every once in a while, I'll add to them. Like today, somebody asked me about putting in a new video about something, a specific tool. I said, I'll think about it. Because not everybody has access to all the tools, and I want to make sure that they're evergreen videos, that they apply to anybody. So the trade setups, I make sure to make them fit any portfolio. For example, today I shared a video about, or actually I shared the video last night about Oracle, and I said, this is a crazy market. I need a non-crazy stock to see if I can make some money out of a non-crazy stock. So I shared what's supposed to be a boring trade. Look, there's still 81 people there. I'm not there. There's still 81 people. Look, somebody's talking to me in French. That must be Claude. So it is the setup. I shared why. I shared the opportunity. I shared the risks from the market. And I said, here is how what can be done. You can buy shares, you can buy calls, you can buy call spreads, you can sell puts, or you can sell put spreads, or you can do a combination of all of these or any of these. And I lay it out what works in what environment, and I say which one I prefer. And then I made the credit put spread to fit any size account. What was the poll? Friday SPY puts. Okay, so these polls I did not sanction, so I don't know what they are. People make them up for fun during the day. So if you're looking for an opportunity to learn and hang out with hundreds, literally hundreds of nice people willing to jump in and help, that picture right there is a concept about what I call upticks mode. See how there's a descending channel and machines systemically sell upticks, all these blue arrows? Okay, so I said, if we get to that, what is this? A SPX. So that was early in the day. So I said, it looks like they're breaking out of this sell the rip mode. Well, it was a fake out because we ended up turning down. So this is where you have to see lessons throughout the day, all day. I kid you not. I would be absolutely shocked if you don't learn new things every week that you can use for the rest of your life, whether you're an active trader or not. These are concepts that are timeless. I learned them through the School of Hard Knocks. No one offered this when I was learning. I'm an engineer and I taught myself all of this. I never read one book. I have not taken one class about charts or options. And I challenge anybody from Wall Street in either of those two concepts, especially charts. I've become pretty proficient at forecasting and reading charts and price action and options. So if you want to learn all of this stuff, that's what happens in the chat room every day, all day. And by the way, Rodrigo mentioned Sunday. So we have all these evergreen videos for learning. We have all the trade setups every day for learning, one a day, just about. Friday and Saturday, I give you a form where you give me the charts you want to study and trade. I do my homework hours on Saturday. We meet Sunday morning for 2 hours. Every Sunday, I record it. We go over all of the opportunities and in a live webinar like this with me sharing my screen. And then I disseminate it to whoever could not attend. So if you cannot meet me during the day, every day, during the live session, then you can meet me every day, 24/7 through the chat room, which you're looking at right now. This is not the live session. This is a static chat room where we have a two-way conversation, publicly or privately. This is the live session. That's every day, all day. It's off now. The market's closed. The other one, flip to the other one, Rodrigo. This is a static two-way, like Slack, like Discord, where you and I and hundreds of other people can chat. There are still 82 online right now, even though it's after hours. You can talk to me directly through direct messages, etc. So I just posted whatever setup on Snap Earnings. That's the video I just told you about. So about an hour. And that's another way to reach me 24/7. Questions, sidebar. Somebody had a mistake in a trade today. I can't remember what it is. Oh, somebody got assigned Netflix. So they popped in yesterday. They said, what do I do? If you scroll back, you'll probably see it there. Yesterday, Gary came in and he said, there's Gary right there. Scroll. So earlier yesterday, he told me he had this iron condor. So clearly he lost money on that iron condor, but he was more worried about what happens because it expires today. And clearly his credit put spread, the bullish part of an iron condor, was completely wrong in the money. So he was worried about getting assigned overnight. I said, maybe you get assigned, but it's not a big deal because you're protected. And I told him what to do. And sure enough, he woke up and he owned shares. So he had a margin call. He was kind enough to share it in public. And I said, no big deal. You pick up the phone, you call your broker and say, please exercise my protection put. Boom, you're out for minimal damage. So that conversation went on. Somebody must have seen it. And somebody said, oh, cool, good to know. Yesterday, we had that conversation. This morning, he came in, sure enough. So I laid it out right there and in plain, simple English. So that's another benefit that you may have. So that is the static. And then the Sunday video, I share it. And then Sunday night, I said twice on Sunday, I wasn't kidding. Sunday night, I do a 10-minute video strategy session as to what goes on in the week, next week, what to look for, what my strategy is overall, because I can't do anything without knowing what the strategy is overall. So that's an important point. What else? Oh, every day before the market opens, you will have a write-up with charts, what to support, what the resistance lines are, what to look for, what not to do, what to do. Midday, I usually have an update, which I did today as well. So,
right. Yeah, and someone's asking, Hershey, is the laptop a guarantee? Yeah, everybody that joins today will get, but you have to do it before midnight though. That's the deal, right? So you do it before midnight, you get the laptop, you get the chat room with Nick all day Monday. Like you can't really get more time out of a person. It's Monday to Friday and Sundays. And I've never seen Nick get sick, to be honest. But yeah, guys, this is something that if you want to do it for the education, I can totally get it. I know people that do it just for that, for the education, other people for the trading. But the other thing there, Nick, is really the ongoing mentorship where it's like you become like their trading partner, which is way better than doing it by yourself, especially if you're new with what's happening, right?
Yeah, I stole the thing away from you. Sorry about that. Okay, so how about we do a live education like right now? What do you say? Okay, so let me see. Where is the chat room? Okay, I was going to ask, how many people don't know what calls and puts are?
Hey, really quick, Nick, got to give a shout out to Paul. Welcome to the family, Paul, newest member here of the Options Inner Circle chat room. Let's go, Paul. Come on.
Okay, so welcome. Anthony's asking, do I feel like there's too much? There is too much. There's a lot. Is it too much? I don't know. I'm a sponge. I love learning. When I'm interested in something that can make me money, something that can stop me from making mistakes, bring it. Let me filter out the junk. There's very little fluff. Sometimes the questions are repetitive. That's why there's a lot, because many people have the same question, and I don't mind. I have programs that allow me to retype the same things over and over so I can become more efficient. So I don't mind repeating the same stinking lesson over and over. Let me see here. Kind of know. Okay, Mary, I see that. All right. How to profit from puts. Okay. Okay, I can cover that, Caesar. So all of these are pretty much the same question. I love it. So we're going to delve into it and give you a plain, simple example, real life example. What is a spread? That's an easy one. Okay. Okay, now we're talking ETF. I'm going to table that. All right, so that's enough for now. You've given me plenty. Thank you for asking. We've got Mary, Phil, Caesar, Barry, Andre, Anthony, of course, and Samuel. So not to shorten your name without your permission. Okay, so I'm going to use this since it's already up there, and Snap. So this is, first of all, this is what they call, this is E-Trade. I'm not recommending it. It's good for presentation purposes. It's meant to be good, but it's got a lot of bugs, disclosure. So that I perceive as bugs. Maybe they have issue with that. This is what they call an options chain. So first, let's back up. What is an option? What are options? Everybody hears that options are dangerous. First of all, options can be safer than stocks. Option can definitely be more dangerous than stocks. It all depends on what you do with them and how reckless you are. Why are they reckless? Because you can lose and win fast. But you can also be safer than stocks, and I'll explain to you in a second. So what are they? You've heard put options, you've heard call options. I want you to shake all that information out of your head. Forget about it. You've heard puts are bearish, calls are bullish. That's wrong. They're not. Both are both. It all depends what you do with them. Okay, so shake all that information out of your head. And this is plain, simple English explanation of options like you probably will never have anywhere else. I won't speak Greek. I won't tell you this and that. I'll just put it bluntly. Options are contracts. There's a buyer and there is a seller and there's a contract. You have two kinds of contracts, put contracts and call contracts, but they're contract. I keep repeating that word because I want you to focus on what's in a contract. What is it all about? Well, there's usually a parameter, right? Not one, not two, not three. So when you buy a house, there's a contract. There's a price, there's a date, there's a whole bunch of other things. When you get insurance, there's a contract. You're paying their contracting service back. There's a period of time. There's amount of coverage. So these are contracts, no different. So the put contracts describe one thing. The call contracts describe something else, but they have stuff in common. What are they? Time. Time is a parameter of the contracts. Right here, I'm showing two. I'm showing one contract that expires tomorrow, 1 day, and one contract that expires a week from tomorrow, 8 days. And there's also another common parameter, which is what? Snap. Everything on this page, regardless of what they are, is about snap. Okay? And two contract kinds. One expires in 1 day, one expires a week later. Now, those are two parameters. What's another parameter? What is the count? How many things? Well, every contract on this page, calls, puts, regardless of the levels, every contract, if I do one contract, it is 100 shares. Whatever the agreement is in the contract, it's about 100 shares. So these are three easy terms to comprehend. Time, okay, 1 day, 7 days, 8 days. What company? Snap, that's easy. How many shares? 100. That's easy. Those are easy. Now it gets a little bit more complicated. Okay, so price, that's another parameter, term of the contract. You can pick whatever price you want. Calls or puts, it doesn't matter. You have a table of prices, and this varies from stock to stock. This one has them in 50-cent increment. I love that because that allows small accounts to trade like a big account, because you can have a small spread that gives you percentage yield without risking a lot of money. So if I had a $2,000 account, I can still put on some trades, active trades, and not risk the house. So that's good. Not everything has 50-cent spreads. What do I mean by 50 cent? You can see 29, 28 and a half, 28, 27 and a half, 27, 26 and a half. You see that? It goes in 50-cent increment. Some are $1, some are 5. Longer term ones and bigger stocks, they're 20. So you're forced to have at least $2,000 in your account to do at least one trade, which you never want to do one trade for your entire account. So that would be crazy. So in this case, it's manageable size. All right. So we haven't said anything about what they are. We're just describing the parameters, right? So we have time, we have the count, how many shares, what stock, snap, and price. Okay. So now let's delve into what they are. But first, actually, I will do that. So puts, I'll explain puts because the questions were on puts and they're easier to explain from the concept. Let's say I owned 100 shares of Snap today, and we're going into the all-important earnings report. And I saw what happened to Netflix a couple of days ago. I was like, good Lord, I do not want that for me. So I need to buy myself some protection. I want the stock. I still like it. If I didn't like it, I would sell it. But I like it. I drive a car. I like it. So I buy insurance on it. So I own the shares. I like it. I'm afraid I'm going to buy insurance on it. I don't need insurance all the time. Okay, because I do my research and I know I trust the stock and I buy it. I don't need insurance. But during an unusual setup, Netflix just lost almost half its value. I don't want to lose half my money. So what do? I pay a little bit for peace of mind. In this case, if I wanted to stop the bleeding at 26 and a half, I would have bought that put 26 and a half. I would have bought that put for 26 and a half, and that would guarantee me my stock. So what does that mean? So I pay $200, $2, and it's 100 shares, right? So $2 times 100 shares. So it's $200 out of pocket, and I can sleep tight knowing that tomorrow, if we wake up and Snap is at 0, I'm out at 26.5. What? Yep. I can buy a put, which affords me the right, but not the obligation, to sell my shares. I don't need to own shares, but that's a different conversation. But I'm giving you the example as if I own shares, so I can explain the concept of having a put. So buying a put is buying me, the owner of shares, the right to sell my shares, not the obligation. I don't have to. When you dent your car, you have the right to file a claim for the insurance company, but the insurance company is not going to force you to do so. That's the same here. You spent $200, maybe you're okay losing it. They did their job. Tomorrow you survived the earnings report. Now you're back to believing in the stock without the noise of the earnings report and Netflix. So then tomorrow you can sell the insurance back if there's a value to it. If not, so be it. You waste money on insurance every month, on your car, on your health, on your house. Never once do you say, gosh, dang it, my house didn't burn down. I didn't get to use my homeowner's insurance. Nobody says that. So this is the same deal. You don't need insurance all the time, thank God, like owning a car. But if you spend $200 to protect your shares, why not? So that's the concept of a put. So if I buy a put, I'm buying insurance. So you're saying, well, it is bearish. No, it's not. If I was totally bearish, I would get rid of my shares. So you're saying the seller is bearish. No, he is not, or she is not. If I sold you that put, I want your shares. Why on earth would I want your shares? Because I'm the guy who's guaranteed to buy them from you. So you were worried about your put, your stock. You bought the put. I want your stock, so I sold you the put. So the seller of the put wants the shares. He or she are bearish. The buyer of the put owns the share, wants to keep them. He or she just wants peace of mind. Everybody wants the stock. It's at what level they want it at. So me, the seller of the put, the other side of the argument from the buyer of the put, what do they expect? They expect it to fall. And if it does fall, then the buyer of the put says, you said you'd buy my shares, here you go. They put the stock, they assign the stock to the person who sold it. So I would wake up owning shares. And that's what happened to Gary when Rodrigo was scrolling Gary. So Gary did this with Netflix. He sold a put spread. He sold a put and he bought a put below it. And he collected a credit. He was hoping Netflix would not fall below 335 because he's committed long at 335. He said to somebody, I'll buy your shares at 335. Whoa, you're saying he must have lost his shirt. No, because he was smart and he bought a put below it. So he took the risk, but only a little bit. So he sold a put and then bought one right below it. So instead of collecting 235 and nothing but, he collected that, but he did give back 200. His numbers were different, but this would be the example here. So the next day, stock fell through everything. So his position was completely wrong in the money. Price was in the low 200s. What happens? He woke up. Somebody said, you said you would buy my shares at 335. So he woke up owning shares at 335. Well, that triggered a margin call. So the broker said, you need to bring money. You have 3 days, please. So I said, that's okay. What I would do is, it's happened to me before where I get assigned shares. Margin call or not, I can completely unwind this trade by saying, hello, broker. Yes. You remember that one put you gave me? You assigned me share at 335. I owned the 332.5 put, which is the one below it. So in this case, if I had sold this one and I got assigned shares at 27, I woke up owning shares at 27, I own this one. So this one affords me the right to sell mine at 50 cents lower. And so that's what he would do. He would sell his shares below. So his trade was bad, but as designed, it had a limited amount of risk. At first you go, whoa, you bought the shares at 335, dude, you just lost $130 a share. No, he only lost $120, $1.20. So
Nick, really quick, and I'm getting a lot of questions here in my email, so I'm just going to try to knock them out here really quick before we do continue with this session. That's cool, Nick, right? So
yeah.
all right, so these are a couple of the questions that you guys have emailed pretty much. So does Nic Chahine go over the member trade ideas throughout the day? Yes, that's pretty standard. Are the sessions recorded? The Sunday sessions are recorded. They're posted in the chat. Are the lessons live or pre-recorded? So everything with Nick is live. Everything in the chat room is live right throughout the day. Everybody that joins, yes, everybody that does join will get the free laptop. Can this help me if I don't, like, if I only trade crypto, commodities, Forex, or equity? Yes, I think we have people that even trade Forex there, correct, in that. Is this for new traders only or for experienced traders? Nick, what would you say? How would you answer that one?
On crypto?
No, if it's just for new traders or
No,
for advanced
definitely
traders.
not. This I can't describe it. I literally can't describe it. The room, having 270 people in one place, all for one thing, trading. I have equity only traders. I have options traders. I have a blend of both. I'll give you an example of that right away. And then I have futures traders and I have crypto traders. But crypto traders tend to do other stuff too. So I have avid crypto traders as well, but they're also options traders. So today, who was it? Late in the day, we were watching Snapchat and how it rallied and then it fell 20%. 20%. You saw it. I was like, what? So I went and read the report for them live. I was like, there is nothing bad about this report. So it rallied to here first, here. And then it fell 20%. I said, this is weird. It's like the market makers were trying to fix a mistake or something. Nothing in the report was bad. They missed estimates by 300%. It's 3 cents, 3 pennies, 300%. But the headline writers want eyeballs. So if you read the headline, and I did go to Benzinga's headline, thank God that they give me the headline itself and not the opinion. So I read the data inside. They grew business. And then the second headline was the user growth falls below 20%. That's the way they word it. Missed it by 300% and falls below 20%. So I go to read. They grew user base 18%. So instead of saying they still managed to grow 18% the user base, which is pretty phenomenal, they fell below 20%. That's the wording. And the 300%, they missed the earnings by 3 pennies. Who cares? The sales grew 38%. 38% growth in sales. What the fudge is bad about that? There is absolutely nothing bad about this report. Nothing. The guidance was growth between 20 and 25%. Maybe you're saying, okay, so you're going to guide, you're going to soft guide, you're going to grow less. Yeah, we're not shrinking. We're just growing a little bit slower. So my whole point is options trader, I'm trying to remember his name. Late in the day, he's like, I just bought Snap at 24. When this happened and I read my comments, so he bought shares at 24 after hours. Clearly, this is not strictly an options traders because he went out and bought shares after hours. And he got off of the shares, I think, at 29 in minutes. In minutes. I'll get you the 1 minute chart. It's not even minutes, seconds. So it came down to here. He bought it at 24 whenever. So these are 15-second charts. What is that? 7 or 8 ticks? Yeah, it is minutes. He was up above 29, almost $30. So this is somebody who does options, who doesn't mind buying shares, who is very basic option knowledge. So he's looking to expand his horizon. So do you need to be an expert? Hell no. Can you become an expert? I'm going to give you all the tools that I know. And a few eye-popping, eye-opening aha moments is like, what? Is it that easy? It's that easy. All you have to do, the hard part is on you. What? Discipline. It's that easy. The basics are super easy. The discipline is the difficult part. And it's a lot harder to do it all by yourself. I used that today. I had that discussion today. I said, I have a couple of guys and girls that share a lot of trades. And Ryan in particular this week nailed it. He was short Netflix. He got people short Netflix at 290, I think. They made, I don't know, 15,000%, whatever they made. I'm no joke. So it was not my idea. It was Ryan's idea. And so he shares, right? So when you share ideas, you become more diligent with your actions.
Right.
So you don't do stuff willy-nilly. So you become a better trader by sheer being in a room with other traders, because they're doing the right things, or you think they are. So you tend to do the right thing because people are watching. So
yeah, and then we have a quick question here. What is the schedule? That's Monday to Friday, 9 to 5, Sundays from 10 a.m. Eastern to like 12 noon. Is there there's a 7-day money back guarantee, and the price today is the same at renewal. And really interesting, Anthony Larkham, do you address peeps that don't have discipline? What's your answer there, Nick?
What was it? The discipline in what way? The discipline to do the right thing, because you know what the right thing is. It's very basic. All the right things to do are very basic. The hard part is sticking to your rules. The rules are simple. I can share them with you right now. You have a paper? Okay. 1, NT. I have shortcuts that do it. I type it so much. Check it out. Okay. Watch this. NT. Okay. No trigger, no trade. Very simple. No trigger, no trade. What does that mean? If you don't have a specific reason to take a position, whatever that position is, however you do it, in whatever segment you are doing it, if you don't have a specific reason, why do it? Somebody just today, what's his name? Atul? I forget. I think it's Atul. No. Anyway, he was long Google through the GOOG. He's down 3%, and he's asking me if he should pull the plug. I'm glad he's coming to me with only a drop of 3%, $77 per share. So my question to him was, why did you take the trade? And I sensed a little bit of silence. And I said, okay, so start a list of things not to do and things to do. Don't take a trade without a specific reason. And you thinking it was going to go up is not a good reason. You need a reason for that, a real reason, because that would be your determining factor as to whether you should stay long the trade or not, whether you hit profits or not. For example, if I took the long for whatever, say earnings, which is a horrible thing to do. But anyway, and then that event comes and goes and nothing happened, I have no business staying in the trade, even if it's a little bit loss, a little bit of gains. Why are you there? Your reason is gone. Second one, set stops, exit points. If things go bad, what's your pain? So he's coming to me with a 77-point drop. Should I exit? I don't know. Did you hit your pain tolerance? Again, silence. I was like, okay, so you don't have that set already. You should. When you take the position, you should already set, I'm willing to take 20% or 10% pain and nothing more. That's another piece of discipline, to stick to it. Sometimes you see it hit your level and you say, oh, one more tick. I can just watch it one more tick. And then woof, gap down. And now suddenly you're down twice as much as you want it to be down. So discipline to stick to the rules. And the rules are very simple. They're few and far between, but there are a handful of them. No trigger, no trade is one of them. Setting exit points is one of them. Never take a risk you cannot quantify. Therefore, you should never, ever, under any circumstances, sell a strangle or a straddle or a call or shares without you owning it. So you don't naked short anything except puts to own shares, and that's it. Okay. So those are very simple rules, and the discipline, I'll hammer those rules home in every video. The discipline is to force yourself to use them. I can show you the rules if you don't obey by them. For example, I'm dying to ask the person tomorrow to see if he closed his NVIDIA longs. So let me check, actually. He was short.
Just to give everybody a quick sense, like this is pretty much how it is with Nick, like on a first name basis of the chat room. Like you are doing your trades with him throughout the day.
Absolutely. We're chatting on a first name basis. Some people in the live room, they like to be cute and they give me, instead of a name, they give a handle. Like, I don't know. Now I can't think of one. Tin Man, Sandman. Those are two people and they're very active. There's a Tin Man and there's a Sandman. There's Benzinga. So it's pretty lively. The girls are very accurate. They tend to trade stocks, at least the ones that are outspoken, and people collect information. So if I ask, when are they reporting? 2 or 3 people will jump in with the information. So if I'm missing something, okay, so somebody, Saeed, who is a recent addition from one of these shows, by the way, very active now, twice this week, brought it to my attention a little discrepancy in the price action between fear and the indices, and they both turned out to be opportunities. One played out big time. It was a bullish opportunity. The stocks were falling, but fear was not, and was not rallying. It was in fact falling a little bit. And he pointed it out, and he was right. Today he pointed it out, and we will know tomorrow if he was right. So, but he's watching my back when it comes to where I'm forgetting. The other day, yesterday or 2 days ago, I was trading something and I wasn't paying attention that my chart was delayed 15 minutes. And I was like, what is happening here? This doesn't match the price action and the options. And I was going nuts. And somebody said, your chart is delayed. Oh, yeah. Okay. So they caught my mistake. So it's a community. I think you will love it. I think you will learn from it. The basics of options are there. Responsible use of option methods. Lloyd, who is an active trader too, he came from the Benzinga side as well. He is sharing his trades. Like, he sold a put in Amazon, I want to say 2,340, that expires next week. 2,340. So he would lose money if Amazon falls below 2,340. You heard that right. Amazon was 3,100 at the time. So I said, how you want to quit your day job? This would be step 1, Anthony. Don't quit your day job though until you can prove your method, eh? Especially if you need cash. I think it'll be eye-opening, a few little tweaks in the knowledge base that can change somebody's perception about stocks forever or options forever. Okay, so I promised you a way to show you how options are safer than stocks. So let's go there if you want. If this is okay with Rodrigo, we can go there. All right. So I'm going to share a scenario that has 8 days on the clock. You and I, that's 2 people. You and I wanted to go long a stock. Okay. And you go ahead and buy your shares outright. So you spend thousands buying your shares. I instead sell a put to perhaps owning shares. So you spend money to get long a stock. Me, I decide to do it with options. I go out and sell a put. I'm going to choose this one arbitrarily. I'll sell a 26.5 put. What happens? I collect money. I collect $250 to commit to buy 100 shares. You spent 100 shares, so you spent almost $3,000. I collected 250. We're both long the same stock. You're longer than me because you can participate as much as the stock rallies. I can only make $250, but you need a rally to win. I do not need a rally to win. In fact, if the stock falls, I can still win, make my entire money. So we both buy it. It falls to 26. You come to me and say, dang, I'm down already $2 on a base of 28. So do the math. That's a big percentage drop. You already lost your money. I haven't even started losing. My break-even point is $24. So maybe I lose money below 24. And I haven't even started losing when you've already lost a whole chunk of your money. So that selling the put is proof positive that options are not nastier than stocks. They can be.
Nick, really quick, and someone's asking, they have a full-time job. I know that you have two types of trades. Like you do live, I guess, day trading options or scalping, but then you also provide trades that are a little bit more laid back for people that are busy and just want their money to work for them, right?
I can totally address that, but let me finish the thought here. So this is a proof positive that the myth that options are more dangerous than stocks is an incomplete statement. Options can be more dangerous than stocks, but if you use them responsibly, in fact, you get long, leaving room for error. We discussed it in PayPal today, a company I love. The fundamentals are incredible. It trades, if you put it side by side with Didi, that has decided to delist itself, they're tick for tick. On what planet is that right? They more than tripled their business. They generate 4.2 billion in net. They generate 6 billion in cash from operations. Their PE is cheaper than Apple, and it grows folds faster than Apple. On what planet does PayPal deserve to go to zero? So we're missing a piece of the puzzle. Somebody said, how do you get long PayPal safely? I said, if you force me to go PayPal long today, I would sell a put out in time, way below current price. And if I wanted to own 1,000 shares, I would sell 5 puts and buy 5 calls in the money out in time. This way I'm long, but with a huge buffer. So if it rallies, I'm immediately profiting a lot. If it falls, I don't lose anything until it falls past, 30%. So that's a responsible way to get long a stock that's a falling machete and leave room for error even right below here. So somebody's saying, couldn't I buy a put? You could, but you'd be shorting a stock. So I did mention that puts are bearish in one instance. If I don't own shares, I can still buy a put. In fact, I don't need to own anything to buy anything. I can buy calls, puts willy-nilly. So if somebody does not own shares, and somebody did that today, I'm sure of it, to short Snap, they would buy a put. If I don't own shares and I buy a put, the only way I can make money is if the stock falls fast and hard. That's the only way I can make money. So buying a put when you don't own shares, you are actively shorting the stock responsibly, because that's the only amount of money you could lose, the price for the put. And if it falls fast, you may make a lot of money. If it doesn't, you lose the premium. Versus the traditional way of shorting stocks, you leave yourself open to unlimited risk. How does that happen? You borrow shares. You say, hey, Bill, you've got 100 shares. Give them to me. I'll give you back 100 shares. You take them. You're so sure it's going to fall. You sell them and you pocket the difference. You pocket the money. And then the stock falls. And then you buy back the 100 shares at much cheaper price. And you give them back to Bill. So you made the difference. But if the stock rockets, if it gets a buyout, if it delivers unbelievable results and the market loves it, you're losing for as long as the stock is rallying. I mentioned Tilray. 2018, Tilray went from $40 or $30, 24, I think, to $300. Yes, it was the original GME spiker. Nobody survived that spike. That was short. Okay, what else? Trades, setups. Every day, maybe not on Friday, but almost every day, I share a slow moving setup with a video. It fits all account sizes. It's designed to be a slow mover. I'm not as active trader as I can be because of what I do. If I try to get in and out, I would make mistakes. So I tend to prefer 2 to 3, maybe a month out trades. And that's what I share with 12 to 15 minute videos and tables and pictures and write-ups. Here's what the market looks like. Here's what I think this company looks like. Here's why I'm doing this today. And here is what would stop me out. And here are the methods with which I can do this. Some people are still starting out in options. They can only buy. So they can do that. Some people can do spreads. So you can buy a call spread. And some people can do, which is 2 options. Some people can do selling options. And then I offer 2 other options in that venue. So, and the video itself would be a full lesson. If you watch the one I shared yesterday, it would be like a lesson about options. what does selling a put mean? What are my responsibilities, etc. So yes, we have those kinds. And then intraday, we have, I don't know, anywhere between 2 and 5 trade setups, like buy here, get out here, buy here, get out here. Some of them are 10 times your money, 7 times your money. 2 days ago, we did one that went from 50 cents to $9.50. So if you did one contract, you paid 50, you made 950. You came out with 950, so you made 900. Other times it was bigger, and sometimes it's smaller, but those are available intraday. Like late in the day, I said get long the S&P, and 2 people booked 20% within minutes. I didn't book it, so it went red against me because I'm not that fast, but I bought it for next week, so I still have time on my clock. But they scalped 20%. Myself, I didn't. So now I'm red. Somebody else said, I'm still in them. Are you? I said, yeah, I'm stuck in them, but those other 2 people booked it. So
Nick, and and I know that this started as an options chat room, but it's become a place where people, well, you are covering crypto intensely. People are trading commodities and all that stuff. And you become a sort of like crypto fanatic now, right?
yeah, I am a crypto, not fanatic, crypto proponent, crypto preacher, trying to educate people on why crypto is not evil, and people who say it's evil are idiots. They are on purpose. So like the people like JP Morgan and Goldman Sachs, those big banks and Warren Buffett, if they're in the business of investment, when you buy something for it to accumulate value, and you ignore, you say the best thing ever, I don't want to touch it because I don't want to make the best money possible. That's what they're saying. There's nothing that appreciated as much as crypto in the last 9 years. Nothing comes close. And they're actively saying, nope, not for me. I don't understand. I don't understand it. I'm pretty sure they have investments in iffy companies like Lucid. Doesn't even have a P&L yet. It's got a lot of future and hope. Doesn't have a P&L.
Or
Bitcoin is out there and they choose to ignore it. I think it is a backwards thinking. Okay, so Barry is still confused about selling puts when don't own shares. Barry, that's how you own shares. So you get to own shares. All right, Barry, one more time, my friend. Forget what you know about puts. If I told, okay, so me, I own shares of company ABC. This is Snap. I own shares of Snap. I'm afraid that they're going to fall, so I want to buy insurance. Hey, Barry, you want my shares? Would you promise to buy my shares at 27? And if you look at the chart, you look at the value, yeah, I'll buy your shares at 27 if you want to give them to me. Okay, so give me a down payment. So you would sell me that $27 promise. It's called a 27 put. You would sell it to me. I will pay you for the promise that you will buy my shares. Barry, here's $260. Please buy my shares at 27 if I call on you. You do your homework and say, yeah, that sounds like a good deal. And what if it doesn't go to 27? Then you don't buy my shares. And I get to keep the 270? Yep, you get to keep the 270. So that's me talking to you. So Barry, please buy my shares if I call on you. And here's $267 for you to do it. And if I don't give you my shares, you keep the $267. All right. So cannabis, cannabis fan. Is that where you went? Cannabis get together?
It was a cannabis conference that they did here in the Fontainebleau, and yeah, there was just a lot of companies out there, banks and stuff, and actually several people there were members of the chat room. Like, swear to God, I was talking to them. OG members. One person was a member like from the first, because this has been around when we started like a year ago, right, Nick? And this person has been in the chat room for like 9 months. So there are people that love it, still doing it, and you keep making improvements to the chat. You keep adding more stuff. I'm curious what is the next one? Like, we're all gonna meet at a coffee shop.
I don't know. I don't know what the next one. This one is so busy and so fun and so lively and so profitable for those who can act fast. And if you can't act fast, you're learning a ton. So it's not like only the people that trade fast can profit. I probably had 24 slower questions answered with complete details. Like, what do you think of this? What do you think of that? How do I have this long, I have that long. Like the Google person owns shares, doesn't even own options, and is not looking to scalp intraday. He just jumped in to say, hey, what do you think I should do with my shares? So this is proof positive that the room is for anybody that wants it. Somebody popped in to crack a joke or two and get information and leave. The point is, if you want a resource to get better at trading charts, at trading options, at trading stock, at trading crypto, at trading whatever, it's open for you. You have a place to come to us 24/7. Between, I don't know, today I was on my rig at 5:30 in the morning. So an hour before the market opens, I was already there until this, like 12 minutes before we started here is when I stopped transmitting 15 minutes. I had to walk my dog.
It's like a radio, like a live podcast.
Right. So we ended the podcast, but the chat room is available there. And then if you still want another live session, Sunday morning, big live session. Sunday night, another video. Monday morning, a write-up. Monday afternoon, a write-up. Tuesday morning, a write-up. Tuesday afternoon, a write-up.
Right. And there are people that, they call me on and they let me know that, hey, I have a full-time job and I was able to do this. Like, for example, last week, someone let me know they have a full-time job and literally they just get into the chat room. And I know that you put trades that are 2, 3, 4 months out, credit put spreads, super low risk, high probabilities of success, right? And these are the types of trades that, you call it a slowpoke trade, but like, there are people that have been in the chat room for like a year and, they've been doing these slowpoke trades, but consistently winning those 20, 30, 40, 50% gains. And they've been able to, have some pretty good increases in their account. And that's just out of consistency, Nick, not, rocket ships to the moon. We're talking just consistent basis.
Totally. That's what I said when I said you have to stick to discipline. That's the part that's hard. It's one thing to know stuff. So here's a day where we had 259 people. Mary, happiest person on the planet, by the way. I love Mary. So SPX, whatever I said we were tracking, SPX made 22% pretty quickly. Facebook jumped to, so we're debating, people are watching, and the people who can trade fast. Other people don't, like me. I don't trade fast, but I have the opportunity to if I wanted to. That's the thing. I literally have dozens of these pictures, and not all of them is like, okay, I made 22%. There were a couple that I sent them to Harvey because they're good testimonials. It was those are the heartwarming ones. I just made 2 months worth of my salary or something like that. And although this is not typical that you make 2 months of your salary in a matter of minutes, but then messages like, I've never had this long a string of green days ever in my life. Like that one person had like 12 green days in a row, and he was trying to be active trade. Another person says, I haven't been losing on my trades nearly as much as before when I was just buying and hoping, because I infuse a lot of my messages. We have so much uncertainty. Here's the logic, folks. Listen to this. So what is easier for you to know that Tilray is going to be the $6 next month, or for you to know that it's not going to be $4? I have more confidence that it's not going to be $4 than it's going to be $6. So what if I can make money off of that statement? Selling a put would make me money off of that statement, because I would, okay, let's use a popular Tesla, right? Let's go to a daily Tesla, monster company. People who still try to short it are missing the point. It's not the same Tesla as 2 years ago. So you tell me something about Tesla and I'll tell you something. Hold on, let me see here. I'm trying to move windows. Tesla, I'm going to show you some ridiculous things in Tesla. It's a love-hate relationship. Tesla people have with it. Now that it reported earnings, where is it at? 1,000. Okay. By the way, I nailed the range on the earnings, by the way, which is unusual. I picked up a new tool this year that allows me to, let me see here. I've had 6 hits on 22 tries, 6 losses on 22 tries. So earnings, I've predicted the direction. Out of 22 times, I've miscalled it 6 times.
Hey, Nick, really quick, have to give a shout out. Naden25 and Jennifer Wu, welcome to the family. Let's go.
Hey. Bill.
Warm welcome for the folks there.
Yes, that's great. What? Okay, 400. I'm looking for a number on Tesla. I'll show you. To illustrate, are they splitting? Did they decide?
I know they talked about it, I think.
Okay. I'm going to bring a table here. This one. This is Tesla as of the close today, okay? So again, this is another lesson for you who is still confused about the options. I forgot your name, Barry. Listen, pay attention, Barry. No. Okay, so this is an options chain. Again, just like the one we were looking at, Snap, except now we're talking about Tesla and Tesla only. It was up 3% on a very tough day. That's a pretty good thing to have, not lose your footing completely. And then the terms on this contract are slightly different. This one has 57 days because I arbitrarily chose June. And so I have 57 days. Look, there's a contract for tomorrow, expires one day after, a week after, and then the monthly May, and then one last in May, and then June. This one is the middle of June. I can't remember, 6/18, something like that, expires middle of June. So 57 days. Why did I pull this up? Look at the prices here. How about this? Would you want to collect money for the opportunity to buy Tesla at $600, right? Barry, would you like to get paid for the opportunity to buy Tesla at 600 in the next 57 days? If you say yes, then all you have to do is sell a put. This is not a trade recommendation. Not anybody should. I never sell a put naked, a put, unless I want to own shares. So if I told somebody, hey, I'll buy your shares at 600, they'll give me $400 if I promise them that I'll buy their shares. I sell one contract, I'll get $400. If I'm willing to do it at 680, I'll get $800. So you see that? Someone did it today for Amazon at $2,340. I think that was their number. They collected $100. The promise to buy Amazon at $2,300 thereabouts. That's pretty in 1 week. That's pretty insane. So, nevertheless, there is a risk that Lloyd might need to buy those shares. He so kindly shared the trade with us. Okay, so this is another way of using an option. If I sell this put, means I'm committing to somebody out there. Hey, buddy, I got you. Give me $400 now. And for the next 57 days, you choose to sell me your shares at $600 for whatever reason, I'm yours. Even if the stock is at 500, I'll take it at 600. They'll pay you $400 for it today. If I cannot afford to buy 100 shares, I should not do that. Unfortunately, your platform may let you do that. That is crazy criminal. That's crazy. So what you would do in that instance, you would do a spread. Somebody asked me, what's a spread, right? So let me show you the picture of a spread. This will explain things. I'm taking a picture. So just like the name implies, an option spread literally spreads the risk. Okay, so selling a put is one thing. Selling a put and buying a put is a spread. The order would have two things on it: one sell, one buy. In this case, it would be called a bull put spread or a credit put spread. I like to say credit put spread because there's no denying what it is. It's a credit put spread. It's a spread that's made by two puts, and I'm collecting a net credit for it. So money goes into my account. Instead of collecting $500, I collect significantly less, but I have significantly less risk. So if I wake up and Tesla is at 500, I'm on the hook here, I'm off the hook here. Just like my buddy Gary, he did this with Netflix, and price did go way below his risk. So he was on the hook, but he also had protection.
Right. Right, and you also cover. I know the futures. I don't know. I think they opened a little bit ago, but you do cover futures and you do chart them for people, right?
Say that part. I'm sorry.
I know that the futures just opened like a little while ago, and I know you have several futures traders. You actually chart futures for them, correct?
Every morning, the futures contracts are both the ES, which is the E-mini, you've heard it called, the S&P futures contract, which tracks the index. The SPX is the index. The E-mini is the ES, it's called, is sometimes it's called the ESF. It's the S&P futures mini. The NASDAQ is called the NQ, which also tracks the NASDAQ. So you have the index and everything else is around the index. So you have the ETFs, which are the SPY, the SPY, that's an ETF. And there's the QQQ, that's the ETF for the NASDAQ. So yeah, the futures did they just open? Okay, so we're down 0.17, so we're down 7 points. Not a good start, but not a disaster yet. So we'll see. Yes, they are open and we do track them. I provide the futures traders are very hands-on. So all I need to do is give them the levels in the morning and they can run their own show. They know what to do with it. They come back to me for updates during the day and they're listening to me all day, so they know what I'm thinking. But if they are pure futures traders, and I do have a few, they don't need much handholding, but they like being there because I talk about the direction of the indices all day, so they do get that benefit. So somebody's saying, if I buy a put because I think the stock will go down, the further below the price, yes, the greater the profit. So if I buy a put to short a stock where I don't own shares, I think it's going to go down, and I buy the put, I want it to fall fast and deep. The faster, the deeper, the more money I make. And it is a considerable amount of money. For example, this right here, it shows you that Tesla was only up 3%, right? But if you had bought calls, you would have been up 7%. You want to see something else that's pretty scary? Let's pick calls that are shorter in time. That would make a big difference. So let's go to today's call, maybe. No. Okay, my platform is not doing it. Anyway, it is a leverage response. It's a bigger bang for the buck. This is proof. So the stock is only up 3%. The profit you get from the options is a hell of a lot more. It's leverage response, but that cuts both ways. So if somebody bought puts yesterday, oh, I know why this is like that. Because that's so low. Hold on. Like, that doesn't sound right. What's going on here? Yeah, anyway, I'm not getting anywhere with this platform. I told you, full of bugs. But the concept is, if you have a jump of, say, 5% in the stock, usually the options under normal circumstances where there isn't an implied volatility crush from an earnings report would be hugely up. So it is that's why people say they're dangerous. You'd be tempted, oh, it's only $300, and then, oh, it's only $300, and oh, it's only $300, and before you know it, you look around like, what happened? So okay, here's a good example. IBM was up today. I was trying to find a stock that was up today, and I couldn't find one. And then I did. IBM was up today, and the stock was up 1%. Where is it? Ugh. Is that it? Yes. So this is the IBM for next week. The stock is up 1%. Look at the calls. So it's leveraged. That's awfully high, though. I don't know why it's this high. Anyway, but it is what it is. That's what the platform is showing. It is a leverage response. Whatever happens to the stock, what happens to the actual options is like magnified big time. All right. What do you want to do right now? Do you want to take a ticker?
Yeah, I mean, we went over a couple sectors last time. Is there any particular sector that you've been following up with, or that you kind of put an eye on that we discussed last time?
Yes, Shopify. Somebody was up in the morning and then it flipped and hit them hard. They admitted that they made a mistake and they said, "I hate it," and they walked away. You're welcome, Mary. So I was like, okay, if somebody's looking to buy the falling knife in Shopify, warning one, it's lost footing. Technically, this brings about way more pain. They said, "I can't believe it's under 500. I was like, under 500? We're talking 300, 200 if this actually unfolds. But the probability of that, it's an improbable scenario without a complete market-wide crash. That's my estimate. It's an improbable scenario to the point where we're like, yeah, it's not going to happen. But if it does happen, I should be ready, right? So I don't sell naked puts in Shopify. So I said, you can sell a credit put spread and collect $125, $100 for a threat that ends next week. That leaves more room for the downside. So say, I think it was 445. So if Shopify stays above 445, which is about where my cursor is, they make $130, $125. If not, they risk losing $375. So it's a huge percentage gain, and they don't need a rally. So the opposite, the normal way people try to catch this falling knife is they buy shares. So if you buy shares, you risk $375. You need a 15, 25% rally, actually more, to match what this one would deliver. And this one does not need a rally. So if you buy shares, you need a rally and you don't care how fast. If you buy calls, you need a rally, and like right now. And if you don't get a rally, you don't make money, you lose money. And with the selling a put spread, you don't need anything. You just need the time to tick as fast as possible, because when time runs out, you win, you keep your money. If not, maybe you lose the investment, which would have been lost anyway from buying the calls. So it is you become a market maker.
Right. And so where are you? Well, so the Fed had their meeting today, right? So what's going on there, Nick? What are you thinking about that? Is it, what do you expect?
I don't know what people are thinking. There's no Fed meeting today. There's one asshole flapping his lips. That's it. There's the chief cornhole in charge flapping his lips. There was no Fed meeting today. They just can't shut up. They told us what their policy is 600 times, and they feel the need to tell us he spoke twice today. What's the freaking point? He told us he's going to be a bear, hawkish to the moon. He did that in 2018. I predict this. If they let him raise rates like they're saying they're going to raise rates, 50 points and 75 points, they will cut rates at the end of the year and they will restart the QE. They're going to crush the economy if they do that. 2018, October, things were starting to get shaky. Tariff wars, blah, blah, blah. The Fed was trying to do a QT. What they're doing now, they started looking at raising rates and rolling off their balance sheet, right? And then I think early December, Powell, who spoke twice today, came out and said, we're on autopilot with the QT, the quantitative tightening, what they're doing now. We're on autopilot. The stock market crashed into Christmas. I don't know if you remember, that was a freaking painful crash, and it was from everywhere. Guess what he did? Okay, I was wrong. I will stop the quantitative tightening and I will restart the QE, which he's trying to unwind now. And he's making the same mistake. He's talking too bearish. So last year, 4 months ago, it was transitory. Now it's panic. At least say, sorry, I was wrong. Nope. Let's retire this transitory word. Yeah, how about you say, sorry, I was wrong, and then we retire the word? No, nothing. This guy is crazy. He does not belong where he is. That was a mistake to put him in that office. But anyway, that aside, they had no meeting. I don't think rates can go too high. And if they do, they're going to crush the economy. And I think the Fed will stop because the elections are coming, buddy. Nobody wants a stock market in the toilet when elections are coming. The incumbents will lose. Period. End of story. So you can put it there, whatever you want as far as conspiracy theories. If I was the White House, I would put a lot of pressure on the Fed to not do as bad a damage as they're talking about doing. So now it's the inflation. So here's this. Guaranteed, the inflation reports are going to be mild. Guaranteed. Because if they're not, the Fed will be forced to raise rates and crush the economy. So the White House is incentivized to cook the books. We'll see.
And so last time we were talking about the housing side of things.
Yes.
With HD and Lowe's. Anything in particular there that catches your eye?
Yes. I have a lot of housing stocks that look great, like Zillow, ZG or Z, whichever. It's the same company. I think they have A shares and B shares. This is a stock when the company is healthy, and this one is healthy on paper. I would be interested in catching the falling knife. But my note to my people is, you know what? Maybe you want to think twice about it. I don't want to sway anybody from it because it looks good on paper. But my thesis is, if you have an adjustable mortgage, or if you're going to get a mortgage now, you're probably going to pay 2 points more than 2 months ago. 2 points on a $700,000 or $1 million. I live in California. Closet cost $1 million here. So your mortgage payment is going to go up by a chunk. So what does that mean? You're still going to make your payment, but you're going to spend less. And consumer spending is 2/3 of the economy. So when our housing situation is crimped, our spending gets crimped and the economy comes to a screeching halt. So my fear is, what's going to happen to the real estate market if I'm right? If I'm right about this is going to cripple companies, so maybe Zillow is going to be not as happy with cash and growth is going to disappear. And then you see, okay, do they spend a lot? Good grief. They lose $3 billion, or at least last year, they had a negative cash flow of $3 billion. Maybe they had a special write down. I don't know what they did. If this is a one-off, fine. If it's not, they need to borrow to operate. So here's the thought. If Zillow is rallying, the stock market is rallying, why would I want to take on extra Zillow-like problems potentially? So I would rather be long the market than Zillow. That's just from that perspective. And a whole bunch of home builders, I can't remember, is it Toll Brothers? I remember reviewing them and say, okay, it's falling into support. I wouldn't mind getting long, but guess what? If it bounces, it's going to find resistance, and then if it retests the support, it's going to do one of these in 2 steps, like this. This is not my forecast, but I can guarantee you resistance up here. That's a guarantee. I can guarantee sellers lurking in here. That's all, everything in here is, these are weekly candles. So this is not like intraday stuff. So there's the risk. So I'm going to put an alert here to myself, very technical alert. So this is, learn this acronym. Okay, so it means what it means. It means I don't know what's below here. There is a lot of support here, but technically, if you lose this, you're going to here, technically. So let's see if it happens. This is support. KB Holmes, I bet you it looks the same. Yep, if it bounces, and it loses this support, it comes down to here. That's not my forecast. It's my concern. So if they're rallying, the markets should be also rallying. So I don't want to take on their specific problem. Same with the semiconductors, SMH, XLK, AMD scares the matiktiks out of me. Company is unbelievable, right? This is what Bitcoin is doing, by the way. If you want to discuss Bitcoin, AMD and Bitcoin, same. If you know patterns, look at this, where the cursor is and the white dotted line that goes across like that. This looks like a typical head and shoulders, massive one, massive. The neckline, I'm going to round, is 100. The top end is 160. So there's $60 of downside technically on paper. Clearly, the scenario of it falling $60 from 100 is far-fetched, but you can rest assured that doing 60 is normal because of this. They left a lot of weak points in the chart. This one closed. This one is still open. This is another head and shoulders right here. Never fired. This one fired. The downside of this one is usually from here to here. I'm not as harsh. I give it from here to here. So how much is that? 100 to 128. So there's 70 or lower is a realistic target. The only way to negate it is to jump up above 104 and hang out above 100 for a little bit. You just delay the inevitable, but it's coming. You will be able to buy AMD below 70 sometimes in the next 6 to 8 months. I say this from a loving spot. My favorite trade of 2020 was AMD. I sold puts, like we just talked about, under $20. I collected thousands of dollars for people who said, buy my shares at $20 and $22. So my break-even point was 18 and a quarter, 18 and a half. Can you imagine? Somebody paid me thousands to be there. Say, I'll buy your shares of AMD during the pandemic. That's panic. People panicked, bought the puts. I sold them the puts gladly. Hey, you want insurance? I got your shares. I'll take them at 22 all day. I wish now they're pennies. Nobody would give me thousands for it now. But if I say I'll buy your shares at 60 when it's falling, I bet you I'll get thousands for it. If I say I'll buy your shares if this happens, put it in your calendar. Come see Nick, because Nick is going to be selling puts in AMD under panic on a day where AMD is down 20%, 15%, 10%, 5%. Everybody's panicking. The VIX is up at 25%. I'm going to be saying, okay, where can I sell AMD puts from these poor people? And I will be selling puts. And the worst case scenario that will happen to me is me buying AMD at a 30% discount from after it's fallen already, and break even lower than that. That is a calculated risk that I'm willing to take every day on good companies. I would never do this, ever do this in Lucid, for example, not until it starts delivering, have a P&L. I would not do this in any company that has in Zillow. I need a solid P&L that I can calculate, okay, where is the absolute floor in this, even if they just want to liquidate the company. Like Apple did this in Apple at 60, pre-split, pre-first split. Remember when it rallied to, I forgot the number, and then the $700, I think, and then somebody came out and said, I put a target of 11.11. Remember that? Everybody on CNBC made fun of him. I totally remember it, and Jeremy Brothers making fun of him, how he's crazy. 11.11. Apple fell 40% after that. I think that was around the time iPad came about. They started making fun of the name iPad, that it's a feminine hygiene product. And I was like, what? Are we children here? So it fell 40%. I sold puts at 60, and somebody paid me over $1. And at the time, Apple, it was before Tim Cook or when Tim Cook took over, had zero debt on the books. Now it has 140 billion or something like that. Double check that figure. It had zero debt on the books. So it had all the cash, 80 billion at the time, I think. All the cash was just free cash, no debt against it. So basically it's like somebody, and it had fallen from 132, I remember the numbers now, to about 92. So I came out and said, I will sell the $60 put when it was falling out of bed. And it's basically like somebody says the best house on the neighborhood, Apple was the best company on the planet then, just got a 30% discount on the face value of it. So the stock fell from 130 to whatever, 90 something. And somebody said, would you buy it? And you get a safe inside with about 40% of its value in pure cash. You want to buy it? Sight unseen, friend. Yes, I do want to buy it. And then somebody paid me to try and buy it. Yes.
Right, Nick. And let's say, I know you've been talking about Netflix. I mean, their earnings, I think it was the first year in 10 years that they didn't report any growth or something like that. And then you see Snapchat. I'm just starting to feel really bad for bulls on the tech side, because it's just a massacre, dude, on that.
As soon as Netflix reported, I put out a video after hours. I said, don't touch it. It could be going to 180. No joke. What was the low? So let me see here. The low was 211. All right. So technically it's broken, but if you've been, let me know in the chat room if you remember this. If you've been trading for a while, do you remember Chipotle, CMG, and the bad burrito when they poisoned people? Not purposely, of course, but they had a food poisoning, a series of food poisoning. I don't think anybody died, thank God, but it was serious enough to where, okay, so if you know anything about restaurants, they live and die as far as stocks by their comp performances. How did the sales do this year versus last year? That's like their main driver. And Chipotle turns comps like nobody's business. I have never, ever seen in my life, ever, a restaurant turn comps like Chipotle. So they were doing incredibly well. Their stock was through the roof. It wouldn't skip a beat, $700, whatever it was. And then the food poisoning starts. And then so traffic disappeared. So the comps went negative and the stock just collapsed. It took them 14 months, I think, maybe 17, 18 months for it to go away, for them to start rising again. This is the Chipotle moment for Netflix. The only reason the stock does this is because of user growth. First, all out user growth. And then when the US user growth started tapering up, oh yeah, we're looking for international growth to the moon. And then when international growth turns to loss, and not only that, they didn't say it was a fluke. They said it was going to continue. It's going to be more. Okay, they blamed Russia for it. It doesn't matter why. You just lost your only ace. How long will it take to recover from that? I don't want to find out. So I told them, if you trying to catch the falling knife, make sure you know it's a speculative bet. So there's no investment involved. And if you're already long, do not double down, because I don't average down, period. I average in. If I took a half a position first, I'll add the second half. But if I took my full position at once, I do not add. I admit I was wrong and I just move away from the trade. So Netflix, before they reported, I went out on record in the group. I said, I am extremely scared. I am terrified of what's going to happen to Netflix. They have the chance of collapsing technically, fundamentally. And I said, the last time they reported, now their management team, I think Reed Hastings, whoever was talking, they used to be so cocky. You remember at one point, they said, sleep is my only competition. I thought to myself, you've got Apple chasing you. You've got Facebook chasing you. That's pretty disrespectful. You've got Disney chasing you. Well, the last earnings report, they were humble. I was like, you know who gets humble? Somebody who's vulnerable. They get humble pretty quickly. So I said, I'm super scared. And look what happened. So Andre, Netflix is something to be avoided right now. I would be avoiding it from an investment perspective. But if you're fast enough, or if your risk appetite is okay to take short-term risk, speculative risk, sure, you can trade it. Look at how much it's moving. But if you're looking to add to your position, no. If you're looking for a recovery to 300, no. Not my jam. It would not be great, but I don't think it's feasible. They just told you they're going to lose millions. Right? Isn't that what they said? They lost 200,000, which hasn't happened in 10 years, which is basically never. The last time the stock fell 40%, it was $2.50. It fell to $1.45 or something like that. So this is a whole new ball game. How many
Right.
margin calls? How many margin calls are in this drop? My God. I mean, our buddy Gary, he doesn't have to fulfill it. So he doesn't need to sell anything else. But if somebody bought stock on margin, they force them to liquidate that and anything else they can and over the color the margin. So some of the pain today may be margin call to cover Netflix. I don't know. I really don't know what's the extent of the damage that one stock can do. It's a high dollar stock, and the drop was insanely big.
Yeah,
insanely big.
Just like PayPal, Facebook. That's why it's kind of scary when it gets to the large caps. But so let's just, I mean, if earnings is, let's say tech earnings are bad, they pull the whole market down. And I guess we're just hanging on by GDP numbers, right? That's what I'm looking at, GDP numbers, making sure we're positive.
Well, I don't believe anything that comes out of the government, not because they're mean. I don't think they're competent to count. They revise numbers up to a year later, up to 40% from the original number. So what they can do is they give us whatever numbers that won't freak people out. Next month, they revise it. Nobody looks back. Nobody looks back. They used to have a table that says, these are the revisions. I can't find it. They used to have a table where I go, okay, we reported this and we just revised it. I can't find it. Look at the jobs number, the ADP jobs number. That's the private sector. My God, if I used to be an analyst giving numbers to CFOs. If I handed the CFO a report and saying, I missed it by that much being 40%. Yeah, Bob, come escort Nick out the building, send his stuff in the mail. Yeah, I would not be even allowed back to my desk. I would be fired on the spot. There's no way. So yeah, GDP is important. I think they will, again, cook the books. That's what they do, whether on purpose or by stupidity, they might do that. So what do? I don't put my money at risk or anybody else's ideas blind to the fact that we could have all kinds of weird stuff. So this is why my strategy for the last month has been trying to educate people why I use credit spreads. You saw the testimonial from that one person. Thank God I'm using more credit spreads, because then you don't need anything to win. And even when you have wild moves, if one is up and one is down, so be it. You made money anyway. So I shared an iron condor on the S&P like 3 or 4 times in the last 2 weeks. And they all worked out, because you take a bet on the super conservative and you take a bet on the super aggressive, and you wait. And you need nothing to happen, and nothing will happen. For example, I'll give you an idea. One of the setups I had was an iron condor on the SPX. The SPX is the index, the S&P index. And my iron condor, maybe it's still on the picture. No? Okay, maybe there are 2 SPXs. Hold on. I think there are 2 for some reason. Let's take this one. Nope. Maybe it's the other one. Gah! Long day. Sorry. Where are my pictures? Anyway, the SPX. And I said, I want to take a risk. Oh, there it is. Take an iron condor. So my iron condor was, it's too busy, I can't see it. I took a risk where I didn't think price was going to go above. And then I said, I took a risk where I didn't think price was going to go below. Doesn't matter what the risk is. One is called a credit put spread, which we just talked about, a bull put spread, you may have heard it called. And the other one is the exact opposite. It's called a credit call spread or a bear call spread. And taking both is called an iron condor. I share those all the time, because the reason I like them is because they double your profit potential. They lower your money at risk, and they're self-hedged. So if the markets want to do this while you wait, so be it. I don't need a rally. I don't need a drop. My last one was I was short at 4485. And I was long at 4,300. So I took a risk at 4,300 when the markets were falling. And then the markets did this. And it expired on Wednesday. Was that yesterday? Okay, yeah. And 4485 was where I was short. And it expired. It got under fire on both ends, but both ends survived. So I closed the upper end before the market closed. I said, okay, it was under fire a little bit. And then halfway through the morning or the afternoon, I can't remember, I said, I'm a little bit profitable on that upper end, but I'm going to close it and be cautious because I'm busy. And if I don't pay attention, I may get blown out. So the Iron Condor delivered about $1 in profits out of thin air. So if I did 10, I made $1,000 overnight with very little effort. I didn't need a rally. I didn't need a drop. I just needed to meander between the two.
Right, right. And one of the members asked me today, I guess he was just starting to get in and settled up, but he was asking me what your and I already know, but like for those that don't know, because he was asking like, hey, I saw that, there was a new sort of $800 million package passed for some sort of Ukraine defense bill. So he was trying to trade some sort of like the war stocks, something like that. So I told him I would ask you that question live so that he could answer it for you and maybe anybody else.
I don't know. I don't know who makes what weapons. All I know is, I shared the Lockheed Martin winning trade that was freaking perfect. It's one of those like, ooh, I remember that one. That and gold. Lockheed Martin spiked on the news. And I was like, okay, I don't know what's going on, but I'm going to fade this move. It was extremely poppy. So I shorted it by selling a call spread above and shared it with a video, detailed write-up pictures and theoretical odds of success, etc. And I said, I don't need a rally. I don't need a drop to win. But if you do want to take a different kind of trade, same spirit, shorting, I would buy a put spread, which is a very cautious way of shorting a stock with limited funds and limited maximum loss. Doing both would also give you the most bang for the buck, and shared it, right? And then immediately the stock fell and collapsed. And then when it fell into support, I said, you know what? Days later, I don't hate the stock. I just was shorting the price action. Let's go along the stock down here. That seems a little excessive. And I did the exact opposite. I shared a credit put spread, a debit call spread if somebody wanted to. Again, video, pictures, and all of that. Both worked out. So we collected money to short it. We collected money to go long it. And then, so what I'm saying is, I didn't look at the stocks. So I'll hook up with that person tomorrow. Or you come to me tomorrow during open session, tell me the tickers to see if we can trade it. Maybe we'll look at LMT. What's the other company? I can't remember now. Another weapons company. They're easy to find. But somebody is asking, how can I tell a winning trade? Which reminds me, I'm going to give you another tip. If you're trading options, in fact, if you don't trade options, this is a trick that nobody uses. I don't believe it. I don't know why they don't. I'm going to give you a trick. First of all, look at this candle. Wow. So this is after hour Snapchat. That's a 2-hour candle. Anybody know what these are called? Is there a delay? Let's see. Insert Jeopardy music. I'm sitting up because my back hurts. I'm sorry. I've been sitting here all day. Okay, I'll tell you. This is called a doji. Yes, doji. And it's indecisive. I wouldn't call it doji top. It just shows indecision. Let me word it for you. Let me put it in the words for you. They open, these type of candles is the edges are open and close, and the red or green denotes whether it was open lower than the close. So they opened, and at one point they loved it, and then they said, "Foo, we hate it." And that's like, no, wait, we absolutely love it. And you know what? I don't know. I'm just going to close exactly where I opened it. Complete indecision. So what happens now? They punt it. So they still are punting it for 2 hours. So the way I think about it, I didn't learn this from Wall Street. This is my own observation. This is indecisive market. So when they decide, they sometimes last a while. Sometimes there's only one. The next candle will be about as big as a couple. Will be bigger than one, because it's like we punted it. Oh, now we know. Okay, so they make a move worth of whatever they wanted to, and then some. So basically, it says, get ready. It's about to get bumpy, up or down. That's another story. Okay, so here comes the trick. What were we talking about? Snap. Okay, where is my little sheet of paper? There it is. All right. So when somebody asks me, thanks for answering about the doji, by the way, Amit and Chris. Let's see. If somebody asks me, like the person today that came to me with the Google question, actually 3 people came to me today and I asked, what's the delta on that trade? Silence. Okay, so there's a piece of information on this page that is absolute gold. Absolute gold. And very few people teach it the way it is. If you take a class with options anywhere else, and they say, oh, we're going to learn Greek right now. And then somebody says, what's the delta? Somebody will spew its typical answer, which is, the delta is the amount by which the options price moves with the move of $1 of the underlying. Oh, sweet. How do I use that? Regurgitate the actual definition. Let me tell you what the delta is. It's your odds of winning and losing. That's what it is. That's it. Your odds of winning and losing. So when you buy shares, stock, and I say, why do you buy it? You'll say, I think it's going to be 31 by tomorrow. Okay, so I'll look at this. No, this is not a good platform because there was earnings. Let's pick a stock. That Apple. Let's bring in Apple. Perfect. Okay, give me 10 seconds. This is the platform, the options chain for Apple, and I picked June arbitrarily. 57 days. Apple is 166.5 at the close, so somewhere in the middle here. Okay, this is the column in question called the delta. There's one on the call side. There's one on the put side. The only difference is the negative number because the definition of the delta is the amount by which the options moves with the move of $1. So if the thing rallies, then the puts lose, right? So anyway, ignore the minus number. So anything around current price, which is 166, somewhere around here, is 0.5. You see that number? 0.55, 0.55, 0.45. So in the middle is 0.5. Okay, what else is a 0.5? Can you think of anything in life as a 0.5? What is 50%, right? Coin flip. So when you buy shares, you have a 50-50 chance of making money. Exactly, Mary. You do homework on Apple to give yourself some edge. You believe you did homework, so your opponent knows less. What opponent, you say? Well, you're buying shares. You don't pick up them off the shelf of the Apple store. You pick them up from somebody who's selling shares. Maybe it's somebody who's shorting it. Maybe somebody who thinks it's falling, so they get rid of their shares. You say, no, they're not falling. I think they're going. Give me shares. I'll take them. That's how it happens. There's another side to your trade. So statistically, you're both equal footing. Nobody has an advantage. It could go up, it can go down. So if you say, I think it'll be, by June, it'll be 195. You know what I'm going to say? I'm going to say there's almost no chance it's going to be at 195. And I can back it up with data. Why? Look at the delta. 0.08. Okay, so let's go to 215. This says there's almost no chance that 0.02, that's 0.0193, 0.02. Here it was 50-50, 0.5. Here, no chance. See how it dies on the way up? So if you think Apple is going to be at 190 in 60 days, you should be realistic to know that there's about 10% chance, 10 to 12% chance. Okay, so this puts some tangible numbers in your hands. What do you think your odds are, right? So let's say, what do you think your bottom line is? If your chances of success are at 10%, you call it quits, because that's a lot of hope. I don't want to call it gambling. It's a lot of hope. So if you assign your success ratio a specific scientific number offered to you from an options chain, whether you use the options to trade it or not, if you bought shares, go to the options chain and see how realistic it is for you to make 10%. So if a $10 move is 15% to you, that's the most you can make. anything beyond that is starting to get a little hopium-y, right? So this is a tangible way of assigning yourself a scenario. Like today, somebody asked me, how realistic is it for, I forget the stock, to fall to 450? I forgot the stock. Well, he could have gone to the options chain and read the number. Like if somebody said, what are the odds of Apple being 140 in the next 60 days? Well, very slim, very low. It's about a 10 to 12% chance. Because I can go here, okay, go down, 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 down. What did he say? 140? Yeah, it's about 12%, 15%, 10%. So it gives you a tangible number, whether it's not surgically accurate, but it's a consistent measurement tool. So if somebody gives you a measurement tool that's off by a little bit and you use it all the time, you're going to build perfect things because you're using the same tool all the time. So we do this. That came from the chat room. So the person, at least 12 people today came to me with help with this, help with that in the chat room. Some sidebar, direct messages, because they're there in the live room and the chat room. Some out in the open, like Gary had no problem just sharing it straight out in the open. A couple other people said, please don't share this out in the open. I'm in a position, I forgot the stock. It was a girl, I'm going to say it was a girl, and I forgot the stock and her situation, but it was a credit put spread, which was a bull put spread. She mentioned the delta. We were speaking of a delta. The delta, that her risk, let's summarize it, it had a 0.14. And she had sold it. So the lower the better, because she wants price not to be there. I forgot what stock it was. And she was asking if she should be worried about it. So my answer was, it's still statistically viable. Oh, okay, cool. Psh, gone. So she popped in, she was doing some stuff, and then poof, gone. So she didn't need to hang out the whole day. She needed an answer like right away. She popped in and out. Where is the options chain available? Everywhere. If you trade with any platform, it's available. I'm pretty sure Benzinga has access to one, or Yahoo has one. I don't know how accurate it is. This one here is from E-Trade. TD Ameritrade has one. Thinkorswim, which is part of TD Ameritrade. I think all the platforms have them. But this is a cheating way of you assigning success and failure ratios in the future. If somebody says, what do you think the odds of Apple are going to be 180? You go like this behind, I think they're about 25% chance to be a 180. And you'll be bang on.
And you think it's important as well because I know that when I was just trading stocks, I wasn't trading options. And for example, I didn't think I would need it. But, you know, the more I learned, I started figuring out this is helping me even to trade stocks. So what would you say for people that maybe somewhat reluctant, or they're like, you know, I only trade stocks. Maybe I don't need to know anything about options. What would you tell that person?
I would tell them confidently that I can 1,000% give them better tools to enhance their trading regular stock. For example, I'll use your boss, Jason, Benzinga principal, I believe. And he was on one of these calls one day, and he owns Tesla stock. And he said, what should I do with my stock? I said, first thing you should do is just put it to work for you. What? I said, yeah, you can pay your own dividend. You can create your own dividend. And, you know, the first trade he did, the next time we got together, I think it wasn't you. It was, I forgot who it was. Luke, I think. Luke says, hold on. And he gets up, and Jason comes and sits down, and he says, the other day you helped me do this thing with Tesla stock, and I made $2,850 in a week or 10 days just from doing what I showed him to do with options, with his stock, with no risk. That's it. The only risk is him capping some profits. That's it. He couldn't lose money from that position. So yeah, I wish I can convince my brother to do that. But he's like, no, I'm traditional. I was like, okay. Or you can use the tools that have been created. I mean, they're creating new tools all the time. Did you know we're going to have expiration days every day now for the indices, at least to begin with? Every day. I love it when they had them 3 days a week. And those are the days we can make these gigantic wins, 50 cents into $9. So $50 into $900. Those happen on expiration days, and now we're going to have one every day. The opportunity to do those lottery tickets, as they call it in the chat room, is total fun, little tiny risk, low odd trades, huge payout.
Couple $100 in that. Yeah, just a couple $100. It's really more like, but also, Nick, very important. I mean, you are spending, close to 3,000 hours with these people in the chat room in the year. So, I mean, I don't, you
don't depress me now.
Yeah.
What are you doing? You're gonna depress me. I bought this chair for that reason. I bought this monitor for that reason. I upgraded PCs for that reason. I have a 49-inch monitor I'm looking at, and I'm looking to order another one because I am monitoring 24 windows on Thinkorswim in one monitor. I'm monitoring 12 windows in TradyTix, and that's on top of the windows you're seeing here, which are 16, and 4 other ones for when we're actively trading a fast trade. So I updated PCs. I bought my first Ryzen 9 AMD, which will be my last. There are some phantom bugs that didn't exist in the Intel. So it's a great machine, super strong, but it's quirky. And I bought this cheap gamer's chair, which I recommend because it lays down all the way and it's got a footrest. A little squeaky, but they do sit better than executive gaming chairs. They're cheaper too. It's like $100 off of Amazon. I couldn't believe it. So
good question there from,
it's all about
Derek.
the chat room. The opportunities in there are great. If you're a traditional investor, I think options can level you up. So if you like owning shares and you want to have confidence through rough times, there are ways where you can protect your shares for free. And ways to create synthetic dividends is what I call them. That's what Jason did. Also, there are ways to stay long a stock, but take the risk off the table. What? Yes, you can do it. It's called the stock replacement strategy. There's one that I brought out today. So a friend of a friend, so somebody in the chat room said, my friend, so somebody that's not in our chat room, but somebody in our chat room said, my friend is stuck, sold a put on Netflix for $500. So they own Netflix from 500. Ouch. So they have not been assigned. It's for, I think, September. So they have not been assigned, but the risk is there and they're down thousands on the risk, right? On paper. Once they get assigned, those thousands disappear, and their loss would be them buying shares at 500 and the stock is at 200. So they can sit on it forever to make their money up. So, but they haven't been assigned. So they said, how do you manage that? I said, well, if they get assigned, there is a way to double down without any money out of pocket. I know I said I won't double down, but she's stuck at 500. You're going to have to either say, oops, I lost, or see if you can get, if you can double down without any money out of pocket so that you're not adding risk. I'm okay with that. And I just mentioned the idea because I don't want anybody doing it. I own shares. If you heard of a butterfly, I create a butterfly, but not completely with options. So I own shares. I buy calls. I sell 2 calls. And I own shares, that will be the 4th call. So that will be a butterfly. So if the stock rallies halfway, I get out even without any money out of pocket, because I spend money to buy a call. I collect twice as much to sell 2. So now I'm 0 out of pocket, and I have a butterfly. The butterfly works best if price rallies halfway and dies. So rallies halfway, I can close my entire position evenish. Halfway. So don't do it if you don't know do options, but that's I don't know what it's called.
Well, it's way better really, Nick, than what most traders end up doing, which is going to Wall Street bets or, some of these social media things. And
so I'm going to tell you the advantage of doing the Wall Street bets is the idea is good. Don't trade alone. People are watching your back. We have 250 people in the room watching each other's back, sharing each other's ideas. sharing each other's watch list. Somebody is watching a ticker, you're not. And if they see an opportunity to jump in, look at this, like I'm doing this. Capital do I need to trade options profitably, at least justifying to join Nic's group? Well, here's the thing, Gersh. You can trade with paper to learn. And then when you're ready to put money, you decide how much money you need. The point is actually learning. You don't need money. You just need commitment and time. And you're in the driver's seat. If you don't feel like learning this whole week, you don't show up. You feel like learning the next week, you come in, you ask me 6,000 questions a day. You're in charge. Within a month, you're going to know what's up, and then you're going to know how much money you can allocate. I can do what I do with a $2,000 account. It'll be skimpy, but it's doable. The bigger the account, the easier it is. True mentor. Oh, that was nice. Thanks, Amit. I don't dodge questions. No, I do not dodge questions. I'll tell you something. I like to fight, literally. I like to fight for a sport. That's what I do for a sport. I go beat people up and have people beat me up for a sport. You don't dodge any questions. Plain simple English, that's my goal. I promise you, I learned it in plain simple English all by myself. I did not take courses. I'm an engineer, businessman thereafter, trading all the way. I don't have any formal training, and I put my skills up against the best as far as charting and knowledge of what to do with what. What I don't know is what goes on behind closed doors on Wall Street. And guess what? I have a couple of tools that give me a clue now, so we can really not be blind to what the hell they're doing. And here's the thing. So I'm really known for saying earnings reactions are complete coin flips. So we recently acquired a couple of tools, which I'm sharing with the gang. And I'm on an experiment. I've guessed 21 or 22 times. I've missed five or six. I have to look at my log. Now I'm drawing the blank. 5 or 6. Let's say 6. 6 out of 21 or 22. That's pretty damn good. That's way better than a coin flip. So I'm going to keep tab on this to see if it's a consistent thing or it's a fluke. If it's not a fluke, there's a ton of money to be made on earnings plays, which I've never done before. I've done like by risking lottery ticket, I used to call them, where like I know I'm throwing away money. And if it hits big. If not, also be it. Well, now, if I can guess with that higher degree the direction, then I can actually place trades with some conviction, but I can't claim it yet. So tonight I did it for Snap. If it opens where it is right now, it is exactly what I said would happen. Like I said, there'd be support here and there. Where is it now? Snap. Let's see, 15 minutes. Anyway, so say what you have to say.
Yeah, really quick here. Want to give a shout out, and this is really the beauty of seeing the progress in the folks. Doc on the YouTube chat. This is my first week here, and I started with 4K.
I know Doc.
No, he's in the chat room. I know. So he's been there in the YouTube chat. He's saying this is my first week with Benzinga. I started with 4K. I have 9K now.
Oh, okay. I think Doc is the one that says he's doing.
It's him. He said it's him. Yeah.
Okay.
Yeah.
So I think his goal is to get out of PDT. So you need X dollar in your account so you can trade more often, more frequently without getting flagged.
But Nick, you see really how, because here's the thing, that some people really need, additional income, and being able to you be able to educate them and help them, provide for themselves, right? Even if your business is closed or whatever, the market is open and Nick is there all day, all week. So it's just good to see when the folks are able to implement, the lessons and follow your trades, your guidance and your techniques, that sort of stuff. Yeah.
So Mary's asking, how am I able to give so much attention to everybody in the chat room? So I'm saying a lot of Bang energy drink. So I love it. What can I say? I enjoy it. I love teaching. I love to see the reward right away. The aha moments, the light bulbs that click, and then they come back and say, I can't believe that it's this simple. Like little things. Somebody's saying, what's the best time to trade for income, like scalping on ES and Q futures? The beauty about the futures is whenever you have time, I'll tell you, I have 3 professional future traders that are good friends of mine. that hang out in a Skype room all day, every day. They're
Just to be
wow.
clear,
First of all,
Doc is saying, I came to this chat voluntarily, not being paid, not a bot.
So thanks. So they hang out, they crack jokes all day. When they see a pattern developing that fits their portfolio, that fits their style, each of them has a different style. One person specializes in the NQ, one person doesn't care. They'll trade hogs, they'll trade the ES, whatever is futures moving, the natural gas, whatever. Natural gas. Then they jump quiet. The room goes quiet. They're trading, and then they go back to trading. Okay, time to go skiing. Psst, gone. So they don't carry anything overnight. What time is the best? Whenever you have time, you hop on and you pick up on the way I see this. The futures trading is when you can pick up on a trend that you can measure and say, okay, it looks like it's going from here to here. Let me throw my order in with the stop loss and trailing stops on the way up. Then you do it. So the futures trading is really perfect style. Everybody should trade like that. How? You don't trade without a purpose. So the futures trader never go, ooh, I think it's going to go up. Let's go. No, the good ones don't do that. They have a system. The system clicks, they put the trade, and the order usually has three things in it. Get me in at this price, get me out if it goes too bad, and get me out a little bit here and a little bit there, and then I'm out. They know exactly where they're going in, where they're going out. So they either, and then they move the stops if it goes their way. So they either lose a little bit or they make their run. That's how it should be for any style of trading. You want to own Snap. You decide when is the good time and why. You take the trade and you decide, if I lose 20% or 30% or 10% or $50 or $100, I'm out. Otherwise, I think my target is here, first part, and I think I'll be out completely here. If you don't do that, you don't have a method. So how can you be successful without a method? You rely on a lot of chance. You need a method. Whatever that method is, find it. Not everybody has the same style. My style is different than yours. My first year of doing options was incredibly big. I made so much money, I couldn't believe it. I must have gotten lucky, but I was very consistent. I did 2 tickers. That's it. SPX and RUT. That's it. 2 tickers, one thing all year. Iron Condors. That's it. The next year, I started to get fancy without a system. I started doing this, and I was doing okay until July. I went on vacation, and then boom, punch in the gut, set me back the whole year. So I did nothing the second year. And then I said, well, maybe I need to think about this. And then you establish trial and error. This worked, this worked, this worked. This definitely did not work. Don't do that again. So you need a method. The chat room is there to keep us, the chat room, and more importantly, the live room, the reach. If you need to talk to somebody, that somebody is there. I'm almost always there. If I'm not, I answer fast. And if I don't, somebody answers on my behalf. And it's fellow traders. It's like having a whole gang of traders working for one goal. People are sharing their trades more and more. That shows confidence. I love that. I can't wait to have dozens more. But I'm keeping tab. I'm making sure it's not, I'm making sure the risk is sane.
How would you describe the Sunday session? Because there's hundreds of stocks. I don't know if you can go over that list, because people can actually, I know people that they're busy, they're running companies, and they're only looking for these slow poke trades that you call them, the consistent ones always. And all they do is put, let's say, their stocks, and every Sunday you do a review, and they adjust everything on Monday. They don't even have to pop into the chat room unless they want to ask you a direct question and get that immediate response from you, right?
So the Sunday meeting, I think that's where you're going. I do all the homework. I put it in a nice Excel table, Google Sheets table. This one from last Sunday, look, 417, alphabetically listed, 146 of them, plus a couple more that came up live, with potential trade setups, a link to the sheet, a live link to the chart, and my comment. Hours of work in here. So the first rule of the method is to do homework. If you can't do homework, or you don't know how to do homework, or you want, somebody asked me about CLF today. Brain fart. Okay, so I owe him an answer. I'm looking here and I saw it and it just popped into my head. So I do the homework for you. So how much is that worth? If you're looking to get long Citigroup and you say, hey, what about C? Like, I would never trade BWXT, but somebody asked for it. I would chart it. ATER, I believe that was Hoppy this week. I would never trade it. It's right there. AMC, I wouldn't want to trade it, but it is tradable. Airbnb, we had an iron condor that worked out. I don't know what that is. Coin, definitely. Comcast. So that's a live list that I share with people. This is a picture of it, but this happens every Sunday. And this past Sunday was Easter and holidays, so we did not have a meeting. I still did the homework, and I did 2 videos, and I shared the 2 videos. I broke it up into 2 videos because it was too long. So, and it's alphabetical. So if they wanted A to D, to Disney, I believe, was in one video, and then the rest was in another video.
Right. And where are you overall, Nick, with energy as a whole, as a sector?
You're pushing my buttons. Energy. I would short it. It's a rigged game. Logic doesn't support the story they're selling me. They're telling me that we have an energy crisis. I've said it before. Sorry if I'm repeating myself. I think we have an energy policy crisis. We have plenty of energy if we want it. We just choose not to use it right now. Plus, we're driving less, we're flying less, we're telecommuting more. That's a big part. What else? The cars are not going to be ICE. So the internal combustion engine, ICE, is gone. So if that's the case, and if indeed EVs are more efficient, which I don't believe they are by that much, I did the math on we have a hybrid. My wife has a tiny little Lexus that's a hybrid. It gets 45 miles a gallon, 42 to 45. I saw somebody charge a Lexus with the electric charge, and I did the math on the percentage of the charge they got in 45 minutes or whatever it was. They were, I forgot the number, very little bit cheaper, not more efficient. I don't know about the efficiency, like what it took to generate that electricity. Maybe it's more efficient to generate electricity on an industrial basis than to actually burn it in your car. Maybe it is. But if you drive like a grandpa, you can extend your energy use in your car by 30 to 35%. I know that for a fact because I race cars, and that's how you make miles. Like if you coast up to a breaking point, a little bit at a time makes a huge difference in the long run. Anyway, long story short, we're not using more energy. We're using considerably less. All car manufacturers committed that they're not going to be using any fossil fuels in the future. That's a fact. That's what they told us. So we cannot be asking more energy when we're cutting all kinds of uses. ESG is a thing. There are laws now that you cannot. Somebody was going to tie the performance of the employees based on the ESG investing. I mean, that's taking it a little bit extreme. Sorry, that is the wife, the boss. I got it. So it is. I don't buy it that we have an energy crisis. Whether it's a farce or not, Anthony, that's a matter of opinion. So we can argue both sides. I'm not against you or with you. It doesn't pay to make a political statement. I have people, I've had issues with that before where somebody, calls you all kinds of names for, anyway, bifurcated, no need for that. But from the energy perspective, the logic doesn't play out. It's rigged. Right. It's rigged. OPEC, you can't have OPEC exist in the United States. It would be illegal. Like 2-3 companies in the United States cannot get together to control price. That's what they do. They cannot control supply in order to affect price. And they set policy and they announce it to the world. That's illegal in the US, yet it is out there. So it puts us at a disadvantage. I know somebody's selling me the bill of goods. That's what I know. So I did short energy successfully. I'm not shorting it now. I don't want to pick take that back. I bought a put in Oxy, just one put to relieve the itch of doing anything. It was $250 out to, I forget, June or July or August or something, like months out. And I'm not looking at it. It's probably down a little bit. Last I checked, Oxy was running Okay, cool. So it flipped red today. Sweet. So maybe I'm even or up a little bit. I'm not revisiting it. I want this drop. Well, I don't want it if you're long. Sorry if you're long, but I want to capture this farce if I'm right. If I'm wrong, I lost $200 or $250.
Right. And Doc is saying, well, so in the YouTube chat, Isaac Almendra, can you, and we kind of addressed this earlier, but it's cool because we did have some people that came in after. So Isaac Almendra, can you trade while working a 9 to 5? And Doc, hear this out. Doc says, hey, Isaac, I'm an insurance agent. I popped in this morning, fired off a question about Tesla puts I had. Nick pulled up a chart and I was off to the rest of my day. And I'm actually excited for this Sunday. It's my first Sunday meeting that Nick goes over swing trades because I don't really day trade. That's interesting.
Day trading is a choice. You don't have to do it. My goal is not to day trade. My goal, when I started this service with Benzinga in 2011, I think, 2012. It was different. It morphed into different things. My goal was create income with option spreads. I wanted to try to get people to create a little bit of money at a time at a safe distance, like somebody asked, what's a safe iron condor? That is an option spread, two of them, 4 things in one trade. And they are designed to do nothing and create a little bit of income at a time at a safe distance. Safe is a dangerous word. It's not safe. If it was safe, there'd be no reward. It's safer than other things. So for example, that person that is not trading, day trading, they go home, they read the write-up, they watch the video. The next day, they put the trade on, they leave it, they check on it the next day, they check on it the day after that, they check on it, they come back and say, hey, I saw some progress in here. What do you think I should do? Should I close it? Or, oh, I'm in trouble. What should I do? Should I worry? So if you can do this, you can learn with me. Or what I suggest, like the person saying, an iron condor for beginners, Phil. So follow this, Phil. I shared an iron condor. You watched the video. You say, ooh, that looks interesting. You immediately take the trade, paper trade it. You've never done it. To use money the first time around is insane. It's absolutely insane. I've had people use money and use big money. What? No. So what you need to do is take the trade on paper, whether your platform allows for paper trading or not. 2 things. Write it down if it doesn't allow it, or get a free platform that does. There are plenty out there that offer free paper trading. You can do it there. And track it. Do it again. Say, okay, now I get it. Now I get the inside, because you come to me and say, I took this on paper. Somebody came to me, scared the bejesus out of me, because they told me they took 100 contracts. So they would have made, I don't know, 15 grand that month, that week, if they won. And the trade was under fire. And they came to me and said, I took 100 contracts. What should I do? I was like, what? And he goes, oh, it's paper trade. Don't worry. It's like, whew. So he's jumped in with paper trading. So now he knows the mechanics. It was in trouble. I told him, yeah, you don't do anything about it. That trouble is normal. He's still in balance. The trade worked out. So now he's got a couple of incidents under his belts with no repercussions. So the next one, Phil, if you take a trade, an iron condor on the SPX, for example, or the SPY, you would risk, you would collect $100 on the SPX. And the worst case scenario, if you do nothing, you close your eyes and hope for the best, you could lose 400. That's a 25% reward in 4 days or 2 days or 1 day or an hour. And all you need is price to stay in between 2 places. So it is a relatively safe trade because you can close it for partial gains or losses. So you either lose $1 or make $1. And you can repeat it once a day or twice a week, 3 times a week, once a month, once every 6 months. I did these one time 18 months in advance. I said, where's the market going to go? I sold the credit put spread in the RUT, which is a small caps, 35% below current price. I sold the credit call spread 35% above current price, and I collected, I want to say, a 28% yield. So if nothing happened, the stock market didn't rally 35 or crash 35, I would have had a 25% year. I could have gone fishing. So I called this an ICBM trade, an intercontinental ballistic missile style trade. I don't do those often because people get bored. Oh, I don't want to join the program. I have to lock up my money for 18 months, but you don't get it. If you do one 18 months and you do one 12 months and you do one 6 months and you do one 4 months and you do one 3 months and you do one 2 months, they keep expiring and you just anyway, different styles. So you do not need to be an active trader. You can be if you want to. We're there. If you don't want to, you pop in, you do one a month, one a week. You ask a million questions a day, one question a day, no questions. You can lurk, not say anything. Like today, somebody said something in the chat room, was like, wait, I've never seen that name before. Hello. Like, yeah, he's lurking. Thumbs up. Thanks for a lot. I was like, you benefited? Yep, been here all day. Oh, hey, nice to meet you.
Nice. Nic, do you have any take on the healthcare sector?
Take over what?
On the healthcare.
Oh, healthcare. Bye. XBI or Labu seems like at a place where it should bounce. Somebody said, they asked me that earlier this week. And I gave them my opinion. I forgot what it was. Anyway, so, okay. So they said, well, Labu looks like it's at the bottom and where is it going to go? I said, well, you're not looking far enough because Labu is a new thing. It tracks the XBI basically. So you have to look at the XBI to really appreciate what's lying below. And you use the XBI for your guidance. And I said, as long as the XBI is above this, the Labu should be okay. But if it loses that, then there's more downside. So Labu is a leveraged ETF that moves 3 times faster than this guy. So I prefer this guy. I said, it looks like I would get into it. The companies that are in it are pretty good. But if the market's correct, this one will also correct. Mary, how long have I been trading full time? 2000, I don't remember, 2004, 6, I don't know. I've been trading my entire life. What did I do before? I was an engineer. I was in marketing after that and finance, CFO with an entrepreneurial company. And then I had a couple of companies of my own. And then I said, you know what? I hate everything. I'm just going to do this. So I did this. All right. So I think I'm toast. What time is it?
I'm not sure. I know we've been quite some time here with the folks having fun.
Yeah, 2 hours and 20 minutes. So I've got some work to do, dude. I got some answers to questions to answer.
No, that's cool. No, you've been very, very good with the time here. And so what would you say here? Some closing remarks on your end, Nic. Obviously, there's a lot of stuff happening in the chat room, but what can the folks that signed up here today, Nathan and all these other folks, what can they look forward to tomorrow? So that I believe you're also gonna put a teaser video later tonight for those that join, right?
I'm doing videos all the time. You always tell me that. I'm doing videos all the time. I just did one today. Want me to do another one tonight? Maybe I will, maybe I won't. So what to look for? Just be open. Don't be stubborn. Don't average down. Don't take a trade without purpose. No trigger, no trade. Learn new things. Don't learn too many new things without grasping the ones you're already learning. Don't have 6,000 things on the chart. Look at my chart. You don't see 6,000 things in there. There's only volume profile on the left. Everything else is hand drawn. I do use other tools, but for specific purpose. The number one tool is your eye. Never ever take a trade without looking left on the chart. What happened the last time the stock was there? Like here, if you start shorting XBI without looking left, that's wrong. Last time it was here and here and here, it bounced. Why is this time different? Maybe it is. Don't take the short until it loses footing. Then you can short it. If you're looking to get out of your long here, you're making a mistake. Get out if it loses footing. You waited this long. You got an inch left. Why don't you see what happens? Okay, so look left. Charmaine. Oh, that's heartwarming there. Okay, I gotta bounce, as they say. I gotta bounce.
No, for sure, man. And really quick,
hey, Derek.
we're gonna go right here in a minute. We're gonna show you the live chat room, a couple videos from Nic, maybe if you guys behave. But Nic, thanks for being here, man. Absolutely. I'll see you in the chat room, my friend.
Absolutely. Where kick me out? Can you kick me out? I can't find the button.
Uh, I don't know how to do that. I just
All right.
turn
Oh
off your
yeah.
computer.
There it is. There it is. It was hiding behind the chat room.
Okay, all right, cool stuff. Thanks. All right, I think Nick. Um, all right, well, thanks a lot to Nick for being here, guys. You know, obviously he's there, pretty tight with the chat room. So I'm gonna show you very, very quick here what the chat room is about because a lot of you guys signed up, and I just want you to kind of get a quick overview of the platform. Um, okay, so this is the I get you call it the blue chat room or whatever. It's the general chat room, and you'll have two channels here. Very important. One of them is called the inner circle chat. This is where everybody, including Nick and the gang, is hanging out, talking about trade ideas, feedback on your own trades and strategies, so that you can learn real time. And keep in mind, this is just we're going to go to the next chat room so that you can see, but there's different ways, places that you can communicate with Nick. So this is one, right, where there's back and forth, two-way street, three-way street actually, members among themselves, and Nick back and forth with you. Then you have the other channel right here, Nick's important messages, right? So this is where only Nick can post. It's super easy to read, very easy to follow. You don't have to scroll for a bunch of minutes trying to find really what you need to get, which is something that might happen here because it's more of a conversational thing, in the chat where everybody's at. But in the important messages, it's like down to the point. Like this is the trade, this is the setup, this is what I'm looking at, and so forth. So you have a proprietary scanner there on the right. Keep in mind, you're not going to see the scanner anywhere else. It's only for the people that have the chat room. Then let's see. So this is the Nick's important chat room. That's where he will post the trades, entries, exits. And I'm trying to find the live trading session, the live session he put here. So it's always in the morning right there. You see 8:22 a.m. So it's always going to be around 8:20, 8:40 a.m. It's definitely always pre-market. So at that point, you literally do a pre-market scan session with Nick in the morning. Everybody going over stocks, what's happening pre-market, what's moving, what kind of stuff's happening, how to take advantage of these moves as well, right? So you get an update, you get commentaries, right? And this is the most important link. These other ones are important. They're charts of the indexes and the futures. But if you do want to get into the live trading today, look at this. What could go wrong today with Powell talking? That's pretty funny. And what did happen, right? So the live session, here's where you go to join the live session Monday to Friday, 9 to 5 p.m. You click on this. All right, so I put my name there, right? And you pretty much put your camera there. Turn off your audio, turn it on if you want to, right? So you can even like put the name here, user that you want to change it. You do view stream or join stream. And you see you have that chat room on the left side. So this is another chat room. This is a chat room that you can have a direct conversation with Nick, private message him, fellow Jitsters in the house. Good to see fellow Jitster. And these are polls that people are just running polls there from what I'm seeing. And I've seen different polls. It's interesting to see what the community is thinking. What are they looking at? What kind of trades and setups they're trying to, look to get into and such. So this is going to be the live screen sharing chat room. So this is where Nick is all day, webinar style. You can put a comment here. Okay. Once you put on that comment, you can private message him or, message it here, and he can respond to you either by voice or text, but he's basically going to show you the chat. He's going to show you the charts and all that stuff. Doc is in this chat room too. I don't know what these folks are doing here in this chat room. It's kind of late. Nick is not there. Let's give him a quick shout out there for Doc. Just wake a couple of the folks up here. Let's go. Nice little wake up call there for the chat members. Wake up, guys. We have a lot to do tomorrow, just a heads up. So that is the live session. You can see the futures are charted out. This is S&P 500 E-mini futures. You can see the notes and everything is pretty much laid out for you. There's no guessing. Everything comes with a strategy, a plan, a setup. Let's look at SPY. Let's look at the Qs. Okay. So there you go. I mean, these things help me a lot because I day trade. Well, I mean, I don't necessarily aim to make a day trade, but volatility kind of works, a certain way. So if you're trading options, day trading options, and you're up a lot, you might as well sell that same day, instead of risking a gap up or something like that. Let's say you would have bought calls here, like bought puts at the bottom here, like where it says support, like the market gapped up in the morning, even at the open. So your calls would have been toast, maybe, depending how far out you went. And eventually the market did go lower, but it did eat up some premium. So that's why if you're day trading, you need to have a plan, a strategy. And Nick is pretty straightforward about that. That's why these lines are right here. We'll give you the exact information that you need. But I think we've covered most of this stuff, guys. Most of the chat room, the features and all that stuff. If anybody has questions, reach out. Any algos, Anthony? I'm not sure if there's any algos. You mean in the chat room? If there's, I don't know. I don't know if that's what you mean. Let me know. On the charts, I'm not sure, but I know that Nick does his own charting, so he's pretty much going to do that for all you guys. Does the screener filter out? I'm not sure. No, KS, that screener has its own internal backend way of pretty much finding those stocks for you. It's a pretty big list. It's pretty, far. So it's a great place at least to kind of like, get in there and start finding trade ideas, right? Keep in mind, it is included. It's not like, an ad, like you don't have to pay like anything more for that or nothing like that. On the charts for signals, Anthony, Nick will give you all the signals pretty much. So he will tell you, as you can see, he'll like draw levels and things like that, pretty much where you have to look out for, right? And if you don't mind, guys, use the chat, not the Q&A session, because we haven't been checking that Q&A session. Do you review after hours data? Yeah, Nick does that. Do you cover losses after rolling positions? Yeah, all these questions pretty much fall along the same lines. Nick does cover all this sort of stuff. Mick is asking, how do I see about signing up? Mick, make sure you're using the link that we're putting in the chat. That's going to expire at midnight. So, and if you see, yeah, so pretty much everything will be out there in the checkout. Can you show an example of the single? A single what, KS? Do they do just calls or puts? So in the chat room, you will do calls, puts, you'll do spreads, counters, condors, anything that you can imagine, Nick can do it. A lot of people, some people, it's just about the style that you have. KS. So there are people that just like to day trade options, that like to trade the volatility. There are people that like to be a little bit more on the, wider kind of bets per se, where it's higher chances, higher probabilities of success. So there's different types of traders, different types of risk appetites between traders, and that kind of dictates really, what kind of trade you make. Because with options, you can do all sorts of trades. So yeah, Nick is doing easy trades, basic buying the call, buying the put. He's doing the more complex trades, doing the spreads, the counters, the condors, all that stuff. So he does cover everything. And but yeah, folks, I think we covered everything here today. Again, if you have questions, just reach out to the contact that's in the chat. Do this before midnight if you want to take everything that we went over. And anybody that joins will enter a raffle. And we're going to call this person in like 2 weeks. Pretty much, we're going to pay for your flight, hotel, food, drinks, everything for the FinFit conference in 2022. So you're automatically enrolled when you join. Just have to make sure you do it by midnight. So without further ado, folks, have a great evening. Thanks for being here. We'll see you guys in the chat room. Stay safe, and make sure that you're always trading with a plan, with a strategy, and join the community. Give it a shot. There's a 7-day money back guarantee, literally no risk on your end. And just reach out if you have questions. So thanks a lot, folks, and we'll see you next time.